Morgan, BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish.
Yes, sir. Happy Aloha Friday. In Hawaii, we call it Aloha Fridays. 8:54 a.m. Firing. Happy birthday, Rob.
What's got you so excited?
Hope the birthday was great, man.
It was a good time. What's got you so excited? Aloha Friday.
It's Friday, man. It's Aloha Friday. I got my electrolytes going. I had double espresso this morning. I'm firing.
Cheers to that, brother.
Yeah, I just took my zinc, my ashwagandha, my electrolytes, and probably gonna take my men's daily multivitamin. I'm firing, dude. Beautiful day in paradise.
I've heard things about ashwagandha. What does that one do? Is that a Chinese peptide?
No, it just helps for sleep, stress, endurance. Took some magnesium. It's just kind of like I don't know. It's a stack. I'm just stacking things and just trying stuff out. See how the body reacts over here.
It's just supplement stacking.
Another new all-time high in the stocks today. Meanwhile, crypto is in a bear market. Guys, this bear market is really hitting hard right now, isn't it? I mean, look at NASDAQ, SPX. Oh, boy. We got a banger lineup, though, today. We got Jordi. We got Nick, Tristan, Vance, Michael. Going to be a fun one. Yeah, could be kind of taking us back to the long stream vibe. So, yeah, man. Aloha Friday.
Aloha Friday, indeed.
Yep.
Yeah, the stocks are doing well. I anticipate that will continue. Crypto, they're removing regulation. They're trying to do everything that they can. We'll see if it's enough. Believe it or not, it's 2026 now, and there's crypto companies in the stock market. Did you know that, Andy?
Of course, but they're not pumping. Of course, they wouldn't be pumping, because why would they pump?
What are some of the top stock crypto companies that we have out there? Obviously, Coinbase.
The DATs.
The DATs, of course.
Galaxy.
Wisdom
Damn,
Tree.
that Joseph Shalom video is ripping on YouTube.
Love to see that.
Everyone loves it.
Tree is a publicly traded company.
Yeah. Dude, I think we have some news to cover.
Okay.
Before Jordi comes on. With good vibes today. Happy Friday.
Why don't you lead the show today, Andy?
What do you mean lead the show?
Let's take a look.
You're not feeling too hot, are you, over there, bud?
Take it away, brother. I'm here for the ride.
Here for the ride.
What have we got? What have we got on the docket?
Well, we got Jordi coming on in a couple minutes. But to start, Sky has hit $10 billion of total stablecoin supply, making them the number third biggest stablecoin in all of crypto. coming absolutely for the number 3 spot, pretty much locking it in. I think the battle of Sky versus Athena is very, very clearly being won by Sky right now. I really don't know if Athena is going to be able to turn this thing around. I actually think that they have some things up their sleeve that will get them to grow this year. But yeah, Sky has hit 10 bill. I mean, I think these stablecoins are going to hit trillions. Wouldn't be surprised to see Sky at closer to 100 bill in the next couple years. Similarly to Tether and Circle, which I expect to both be in the trillions. So yeah, man, pretty excited for Sky.
I think we're going to see a lot of growth in the top stable coins. I think the long tail of stable coins may not do so hot for the same reason that I think you're going to continue to see this outperformance of the cycle leaders and the category leaders.
Yeah.
Mag 7 is going to continue to win the stock market. That's where the S&P gains are won. So you might as well just buy the Mag 7. Similarly, I expect majors to do pretty well. A lot of the crypto companies that have been around for a long, long time have had tokens around for a long time. I think those will do well. There's going to be this, I think, this trough of disillusionment for a lot of companies that launched their launched their tokens too early.
Yep.
And now they're fighting to find business and find a way in which they can accrue value from that business back to their token. Buybacks aren't working. We're going to be talking more about that with Jordi.
Or are they? Yeah. So that's Sky, guys. I mean, look, pretty bullish for Sky here. I think market's going to probably reprice them. Syrup has actually been doing extremely well from the DeFi perspective. I think from a token perspective, it's probably one of the better looking DeFi applications. Sky hasn't really, I mean, it's done well the last couple of months, but it's kind of like slowed down a bit over the last several, I don't know, just since the end of the year. So nothing crazy there, guys, but that's Sky. Let's move on to one last thing before Jordi pops in. And I think we have one other thing to kind of cover today. Yeah, this, of course, I mean, this is kind of a bit out of our lane, but holy crap, $15 billion with $1.77 billion for $1.17 billion for American Dynamism, 1.7 for app, 700 mil for bio, 1.7 for infra, 6.75 for growth, and 3 billion for other venture strategies. So pretty insane.
Saw a branding comment here that said, pretty ironic that in this very American-oriented announcement of this fund, they chose to use a picture of Mount Everest, which is obviously in the Himalayas in Asia, not anywhere close to America.
Yeah, they did, didn't they? Why did they do that, eh?
Bit of a faux pas. I'm bullish.
Faux pas?
Yeah, faux pas. It's like a slip up.
I mean, this is insane. I mean, this is like going to power the next AI. This is going to power the AI bubble, right? Like, you know what I mean?
Yes.
Like, this is like going to continue to run that trade hot.
Yeah. I think a lot of VCs are getting kind of crashing out.
What do you mean?
A16, obviously not, but like the same thing that, Vance tweeted about the VC dollars going into crypto in particular is collapsing. So we're not going to get all these Temu versions of different protocols. I think we're going to, and the way in which crypto evolves, because it's funny, we have like this undying belief in this industry, even in the face of adversity when it seems like, things are bleak. I think the way in which this industry does evolve and kind of proves some people right, but it depends how you look at it, is you have these companies like yesterday we had right? On the face of it, plain old insurance company, really nothing special.
Yeah.
But when it comes to the financing, they're able to democratize access to capital, democratize access to these markets and to higher yields. And so I'd imagine that is where we're going to see the next wave of companies come from. They're going to have real business models. They're going to be real businesses. They're not going to be narrative-driven research cabal, research fetish type of narrative companies. That is how they get all their value. There's going to have to, they're basically the way to think about building a company, I think, in crypto is get out of crypto, build a real company. And then when it comes time to allocate capital to grow the business, you go back into crypto and you say, hey, I have a real business. It's generating this much money. I can pay 7, 8, 9, 10, 11% in yield. Come deposit, use the money from the deposits to scale the business.
Yeah, it's pretty insane to hear that RE guy say that he thinks his business is the most scalable and durable business in all of crypto. I was like, okay, well, that's,
whether he's right or not, I think the nature of the business is a lot more scalable than a lot of other companies in crypto. Because a lot of other companies in crypto have found narrative market fit, but have no idea of the semblance of products. Even if they're selling infrastructure, they're announcing partnerships. There's no products. Even the infrastructure products are not
I know what
product
you mean.
market fit.
I mean, look, I just think that $15 billion raise, not a single mention of crypto. Now they have a crypto arm, which I think A16Z uses. Pretty insane though. Like this bull run in equities and in VC is just like not stopping. It's just insanity. Like it's just not stopping. So
I think it'll be interesting to see whether or not the crypto companies in the equities markets continue to lag, because they are right now. But I anticipate that those would be some of the first companies to end up kind of reversing the trend, bullish reversal. If there's companies that do well in crypto, I think the ones that are publicly, not DATs, but I'm talking like Galaxy Digital, Wisdom Tree, these neo finance companies that we've been talking about for a long time. These are the companies that I think are probably going to have that first wave of resurgence.
Yeah, we'll see. All right, guys, we've got Jordi, the founder of Selene Capital. He's ready to go. Jordi put out a banger piece about token buybacks. It's been health maxing. I have not seen his 2026 predictions yet. Maybe we'll do a little bit of that. Talk about the market outlook, what's going on over there at Selene. I think it's been maybe 6 months since we had Jordi on the show, like last year in New York City. So yeah, let's get Jordi up and let's get cracking. It's I think it's 11 p.m. over there in Singapore. So Jordi, what's up?
Oh, it is 3 a.m. So I wish it was 11 p.m.
Are 3 a.m. nights, are they conducive to the health? Is this like a polyphasic sleep schedule that we're on, or what's up there?
I'm traveling to Switzerland like this weekend, so I'm kind of okay to try to pre-adjust for jet lag
to the Europe hours. Yeah. Jordi, happy New Year, man. How's your Q4?
I mean, like I was happy that things were pretty quiet. I didn't get many Telegram messages over the holidays, so it was the first time that I actually disconnected, and it was just very nice and chill. I went to Saudi Arabia, which is not a normal destination for holidays, but I think it will be in the next few years. Like they're building some pretty nice resorts. And
what brought you out there?
I just ChatGPT'd, where is warm and nice and what are the best places, and it gave me a couple good options in Saudi Arabia. Apparently, like they're spending a lot of money trying to make like a Dubai B2, like a second Dubai, and I think they'll get there in a few years.
Yeah, man, I know you're going out to St. Moritz for CFC. Should be a fun week with the lizard people there in Davos. Who control the world with their strings and the way that they pull things, and that's clearly Trump is not playing by the rules. So we'll see how Davos goes. It'll be an interesting one this year. There's a lot of economic activity changing globally. We'll get into that. We'll get into some of your token buybacks, 2026 outlook, but let's just recap 2025, man. How was it for Selene? How was your performance? What did you learn? And like, what are some of your biggest takeaways from the market in 2025?
Overall, I'm happy that we did better than 2024, which was not easy. I mean, most firms and most things did not do better than 24. So it kind of speaks that we've really gotten a ton of talent in, and we're able to navigate even like these choppy situations. Um, Obviously, like some categories did better than others. I would say like venture wasn't like having the best year in history. We made like a pretty big bet on WorldCoin. That didn't go amazingly well with all alts. Basically they didn't overperform. Just like alts didn't do well. Our systematic trading side, it was a mixed bag. I would say like we lost a little bit of competitiveness to like the jump kind of HFT side, which we're trying to really like aggressively prioritize now. So number one priority is like just get like the latency and networking and execution really tight. But we did really well with some of these venues like Lighter. I think we were maybe like the largest volume on that exchange, and did pretty well in the airdrop. So it was a nice kind of end to the year there. And we survived 1010, which a lot of people were like, oh, Wintermute's out of business. And then I'm like, oh, they're
The
saying
rumor mill
Solidi's
was
out of
hot. The
business.
rumor mill was
Yeah.
hot for sure.
Yeah. I mean, we did lose like, a few weeks of P&L. But these things are, as long as you survive and you don't give back too much, it's fine.
Yeah.
And some things did really well for us. We're doing more and more stuff on the liquid side, long short. Obviously, like the shorts have really gone down. So when we track things like unlocks and kind of things that look overvalued, like obviously all of that stuff just kind of went to zero. So yeah, overall it was good.
Good. Yeah, I think 1010 scared the boots off a lot of the perp farmers. It's kind of like made that trade more difficult than it was before that. And if you look at the numbers, it's kind of gone down. We'll talk about perps. So, all right, let's talk about token buybacks. This was like a big thread, a big kind of part of what you were kind of pining on recently. I want to talk about that. I want to talk about health maxing, just a kind of like general 2026 plan. So you put out this post in the midst of kind of this token equity dilemma. Maybe we start here and go into the buybacks as a result of this. So the natural order of thinking in 2026 is going to be like unifying these structures. So it's actually quite funny. Robbie and I have kind of came up with this pro-centralization idea as of recent. Maybe it's not the exact way to put it, but you think about how we had all this kind of fugazi decentralization for the sake of regulatory arbitrage. And then obviously with this new administration and regime change in the States specifically, a lot of that kind of is unnecessary now, you could say. And so coming to this, one of the realities is, well, there's a lot of realities that are hitting the market as a result of this. But I think one of them is that the way that these foundation and labs corps have been structured, have been kind of misaligned for incentives for investors, for stakeholders, for participants, retail, et cetera. So we've got this kind of token equity dilemma. And on top of that, you've got these app layer projects being purchased by larger companies and then selling out, kind of leaving token holders with, not claim on that sale, et cetera. And so you've got this dynamic here that is happening. And then on top of that, you've got this token buyback structure. So Jordi, what's your take on the token equity situation happening right now? How do you see this unification happening in 2026? We've gathered opinions from tons of different folks, and there's all these different kind of ideas. There's yet to be a really consensus way, I would say. What's your take here?
Yeah, look, like the main problem for the industry is that every chart is just down only, and at some point, what's happened is like retail has stopped bidding because they're just not getting enough wins, and there's a few structural reasons for that have kind of caused like every single chart to always just go down. Not least of which is not related to buybacks. It's more related to like unlocks and the other thing I've been posting about is, you kind of force investors with these like 1-year cliffs. And I think, the centralized exchanges love that because, they get to launch things where the only tokens are the marketing tokens that the exchanges are getting. So they're the only ones that have tokens. So they're very happy. The exchanges do best. And then you get these like artificially high prices. I was looking back at some of these Binance launch pads from like a year or two ago, and it's just every single like project, regardless of quality, was launching there at like 2 to 3 billion. I mean, I don't want to like name specific names, but you can just go back and look at them, and clearly like these are trading at like 99% down now. So a lot of it was like this like structural reason of like there's not enough tokens. The founders are drinking way too much fucking Kool-Aid. I've been talking about this. Like it's 5% of founders that I've talked to that like will say that their token is like overvalued. Like to give him credit, like someone like, Mike from EtherFi, like, they launched at like 8 billion, and he like, we're an investor. I talked to him like that week, and he's like, yeah, like this is like dumb. Like what the fuck? Like what are people doing? Like, come on. Like, I love my project, but like it's not 8 billion right now. Most of them, they just drink the Kool-Aid. It's like, oh yeah, like 20 billion, yeah. And then this concept of like having revenue is good. It's a maturity of the space, and you have revenue to do buybacks. Not many projects have revenue to do buybacks, but you do have some projects that have managed to get there. And then there's a few problems. One is the one you mentioned of like, are token holders getting it versus like, is it this equity structure? And I think you have to be very clear on it. And like, unfortunately, like even in the last 48 hours, I've had 2 conversations with projects where I thought that like it was going to be like an equity thing. And then, they're planning to just prioritize equity holders. And it's like, yeah, all these people that bought the token, like what's gonna happen?
Yeah.
So that's this ongoing thing where I always prefer if there's just like the token should be the equity, and then you get some regulatory concerns or tax concerns or stuff like this that comes back to you. I think like the US is obviously like right now in a bit more of a tolerant place where you can do better things. I think an interesting one. So soon there's going to be a launch of something called Fuse Energy, which is a company that has raised at 5 billion on the equity side and has separately raised like on the token side at like 333 million. I think Multicoin led that round as a Solana token. And that's quite an interesting one because it's going to launch as an SPL while, there's like this whole other part of the business that's just making like Web2 money. And it's just like a cash cow. I mean, they have like 440 million ARR, like huge. But then they're launching a token that's not going to be getting that revenue, but then they're going to try to give it utility. So like you can try to like thread that needle, and you have different investors on both sides. So it's worse than having like a safe and a SAF for the same investors. You have like different investors.
Different investors, yeah.
I think like, if you do really well everywhere, everyone's happy. That's fine. Like, that's a good case scenario. You just like tokens doing well, everything's doing well. But these things are expert kind of like difficulty, nightmare difficulty, things to navigate. And then my last point, like on the buyback specifically, like the projects that we've seen in crypto, the few really like successful ones that have buybacks, like look at Jupiter,
Hyperliquid,
Hyperliquid right now. Yeah, Athena, like I guess they don't have buybacks directly, but the dad has done a ton of buybacks, like through the money that they raised through token sales there.
Pump, another one.
Pump, yeah, for sure. I mean, I don't know why it's not pumping more, but
well, this is kind of your point, isn't it? Right? Is like, is there a more systematic way to approach buybacks than just programmatically buying daily? Right.
Right. I mean, I think that targeting, price ranges through some, ratio, either PE ratios or some other kind of like, ways to find out like what is cheap. The simplest way to do it is just like look at the EMA. Like if you're under the average price of the last like 60 days versus over the last price of the last 60 days. And, like things are trending down, you want to buy more, things are going up, you don't necessarily need to chase it and just kind of keep pushing it. You can get more tokens out of the market this way. So I think like, for the few successful projects that can do it, there's ways to do it. I took a bit of offense when like, people say that like they don't work. Like,
Yeah,
oh, look,
I saw
things
that
going
post.
down, it doesn't work. I mean, they fucking work, right? Like, they
Yeah,
work.
clearly.
We know this from like hundreds of years of like, stocks existing, like they work. It's just like, other parameters that
Well, I mean,
need
with
to
the
be
Jupiter
aligned.
case, that like the post that you were referring to, I saw some comments on there, and it was like there was about $1 billion of unlocks over the same period that did like a $70 million of buybacks, right? And it's just you're just kind of like, well, so that math is not mathing here, right? And so from your perspective, right, there's like a more, you're talking about doing this in a very calculated price to earnings ratio based way where you can try to achieve a consistent buyback methodology that is not just purely programmatic based on the revenue of that day or of that week. Maybe you can like walk us through that from your perspective, right? Because you have kind of more of a fund manager style perspective and less of like I'm a founder managing my token, perspective. I think that probably founders want to start to think more in the way that you are rather than in just kind of like doing what the market is screaming at them to do.
Well, I'm happy with like, both approaches, whether it's systematic or not systematic. I mean, you look at like traditional equities, they just like buy back whenever like the board decides that it's a cheap price and they just buy back their shares, and it's like a very standard thing. Obviously, when you're dealing with traditional equities, if they're public companies, you have disclosures, you have windows, blackout windows, these kind of, like there's all these kind of structural considerations so that things don't get too insidery and too front run. If we've decided that these things are commodities, then it's sort of like, what makes sense. But I mean, we're looking at some projects like I would say like Lighter and Meteora that do have substantial revenues that are taking this approach of, they're not just like doing systematic buybacks, but they're like, yeah, like, there's prices we're gonna buy back our cheap tokens, and that should give some confidence to the market that the revenue is going to be utilized for token holders in some way. I think that's the key thing. It's just like at some point, you have to either give dividends or give buybacks. I think dividends are totally fine. Obviously, like they're very normal things to do, and we do have some projects where you stake and you get revenue. I think the Curve kind of crew does things like that. Even like their new token yield basis kind of has this kind of structure. You stake it. If you lock it up for longer, you just get more dividends. I think sometimes those things go into Ponzi-nomics. Obviously, you have the full Ponzi-nomics, which was Olympus down, and you have like the semi stuff like Aerodrome, where it's like, oh, you're locking up and you're getting some other tokens and they're paying your token. Like it's like this kind of hybrid structure. Yeah, I mean, if you're gonna do systematic, I think like the one thing is just don't have something that will just keep buying top lasting, because when the market's good, your revenue's good, and you're just like pushing prices way too high, which is not good for anyone, because when things revert, you just have people that are down way too much, and you've also not absorbed enough tokens. So, did it look like Jupiter was worth $20 billion at the height of like, the volumes that were happening during the Trump token release? Maybe, but like, I would say like what we've seen in crypto time and time again is that you shouldn't put like a growth stock P ratio of like 30 plus on these things, because the space changes so quickly that like, there's a new perp dex every like year. And so like, DYDX shouldn't be valued at like 50x P if they have to defend from like, the new generation of whatever it is.
Is there, right? Because Santiago and C from Dragonfly, they had this whole debacle where Haseeb was arguing more like this should be valued almost more like a city or a state, and they have this network model. And then, Santiago was taking more of this price to earnings ratio. Where do you fall? And this is less about the velocity of price and, directionally getting it pushed higher or lower, but more in terms of the static valuations that maybe something should be valued at. And, the efficient market would, take it there swiftly. But where do you fall on this as sort of the value heuristic? What is your mental model when it comes to this dynamic? Should we kind of fall on one side of the aisle or the other?
Yeah, I have like a pretty clear mental model that I've arrived to after like, whatever, 10 years dealing with these kind of tokens. Now my mental model is this. Like you have revenue as like one source and like future revenue, kind of like a traditional equity, DCF type of model. You have that. And then you have this other thing, which I'll call like, um, it's like this premium for being a good game to gamble on. Like, you go to the casino and then like if they have a fun game and people will just go like throw money at it, they just want to bet. Like, we saw this with pre-markets where like, these things just got popular because people were just able to, speculate on something new that was exciting for them. And some of these like things were very successful as just like a novel thing that people wanted to just bet with each other on. And we've seen this like now, like even Polymarket has these like, oh, what will this thing launch at? Over 4B, over 6B, like all this kind of stuff. I think, there is a value to just being like the thing that people will bet on. Like you'll absorb speculative premium for whatever reason. People will make bets that they know like are zero or like negative sum for somebody. They're just like, oh, I'm gonna win. So it doesn't matter if like overall we're gonna lose 10% because I'm gonna be the winner, and then they're gonna be the one paying the rake because I'm gonna be winning. And so like tokens that have a lot of mind share and that have a lot of like, distribution for places to bet on, they have a lot of exchanges betting on it. There's a lot of liquidity. There's a lot of like people talking about it. They'll during that period just have this extra premium. And that's what it is. It's not about cities and states and whatever. Like it's literally like, are a lot of people wanting to speculate on what is this thing's going to go up or down, and for how long is that going to be the case. I mean, usually like TGE tokens start really high because there's just like a lot of people betting on what the next week is going to look like, and then there's a new one, and then as soon as there's a new one, the old one goes down because there's just like less people giving it that premium, and that's why you see that premium disappear.
Yeah, I mean, coming to that for 2026, then Jordi, is there particularly sectors that you're going to be bullish on more so than others from a token performance perspective, and sectors that you're particularly bearish on from either personal or Seleni's perspective, like applying this framework, right, of speculative premium, L1 premium or not, chain app premium revenue generating tokens? Is it like where are you kind of looking at for bullish sectors and maybe not so bullish sectors for 2026?
So obviously there's some amount of like excitement about taking traditional companies and like cryptifying them and giving them stablecoin rails and like potentially giving them a token, especially if that token is actually like collecting the value of what's happening in some good way. I'm very open to that idea. I think the quality of the assets that we have in the space is kind of shit. Like, you look at like the number one, like the number 10 token, it's supposed to be good. Like it's like the 10th best token in all of crypto. It's the 10th best digital asset, or the 15th one. Like you look at some of the stuff and like some of it's just like this, we have to be having better options than this, like this, or like Doge or, whatever. You just have like a bunch of stuff, right? I think that equities are winning out because like they're more quality assets, and eventually people have realized that you kind of you want something that has longer term sustainability. We will hopefully get some good businesses issuing tokens that represent those businesses and have higher quality assets. And ideally, there's one in discussion that's making me like incredibly bullish, but I can't talk about it. It's like very early. It's not even, I don't know if it's happening. But if you get like a brand that is like globally recognizable and even has like memeability and it has revenue, and you bring that, that's like the sweet spot. So really trying to focus on a few opportunities that can hit all those sweet spots that like imagine like a global brand that
Yeah.
will actually like do this. Like, you can acquire this company for a lot of money, but then you kind of bring those rails. So very excited for that kind of stuff.
Maybe we lost him. Take a quick breather here. We'll be right back, guys. Yeah, we got Jordan back. We'll just set him up. But Rob, I think
I want to take a guess on like what this could
it
be.
kind of gives me like Pudgy Penguins vibes, to be honest.
Yeah.
Like not obviously quite a bit. That Pudgy Penguins is quite a bit smaller.
It actually, you're right, because it is like globally recognized, but I kind of get the vibe of like a GameStop, like a
Yeah,
brick
yeah.
and mortar,
Or like
something
a-
that has
or
some
something.
memeability.
Get
Nike's another good
OnlyFans.
one. Okay, I think we got Jordi back. Let's get him up.
Yeah. Yeah, I mean, I think I was talking about this with the Van Eck portfolio manager in New York last year as well. Like these on-chain IPOs. Yeah, Jordi, we'll get you right back up here. I think you're good now. We're just refreshing you. And yeah, it does seem like there's going to be this pull away from crypto native stuff, if you will, businesses to like these like what would you want to own, right? Would you want to own an altcoin, or would you want to own the tokenized share of a business, right? That's actually, and so I think this is like kind of like the trend that's happening.
I think we're also seeing like the stockification of a lot of these companies. And so if you look at, Jordi said the number 10, but if you look at the number 11, it's
Yeah,
it's
what is it?
Figure HELOC, which is
On
that
like Coin Market Cap?
Yeah. It's number 11 in the market cap. And
So weird.
Obviously this is it's this RWA thing. They're tokenizing these home equity loans. And again, this would be, if crypto didn't exist, they would find a way to do this business, and it would probably go public, or, it would, be private, and then it would go public.
Yep.
And then you could find, this business on a public stock exchange, and you could trade it.
Yep.
But crypto's eating the back end of a lot of these money stacks within a lot of these companies. And so they're tokenizing these companies from the inside out. And I think what we're seeing is like, the first thing that we're seeing is these products from these companies get tokenized, in the sense that, like, first we're going to see companies, before they tokenize their stock or their equity, they're going to launch a stable coin. And like, before Figure goes public or launches its own governance token or network token, it's going to launch this Figure HELOC token, which, if you look, basically just a stable coin. It's just tokenized loans. That, I think, is the first step. And so you'll end up where more and more of the companies in, the NASDAQ or Dow Jones or S&P, more and more of those companies will have tokenized parts of their business, could be a stable coin. And then eventually we'll get to a point where those companies themselves will tokenize their equity. But I think first and foremost, we're going to have more parts of those business get tokenized.
Yeah.
And it'll just look like the top 10 or 15 tokens could just be stable coins or like yield coins. And then eventually I think we'll expand the surface area of the tokenization. We'll expand it from the inside out, going from just a stable coin product that they launched, to tokenizing more and more of the business, the equity, the stable coin, and more parts from there.
Yep. I totally agree. All right, Jordy's back. We got you. Check.
There he is.
Jordi, so kind of hopping onto a different tangent off of the on-chain businesses that you're excited about, which I think again is like Hyperliquid caused an entire restructuring of how the space is thinking about profitable businesses on chain. Obviously, the new administration came in. Now we're having token buyback, token equity conversations. That's happening. I think what you're saying is going to restructure the way that a lot of investors think about which tokens to allocate to in the space. Because if you've got these massive brands, as you're saying, with business models, with revenue, and they have a token, well, that puts them in the top 5, like very clearly, or top 7, right? And so, that game's going to get changed. When we were in New York, you respectfully told me that my infra/DA thesis was just not going to live up to anything. And I was kind of like still a believer in our venture bags. Come 6 months later, I'm absolutely cooked. So you were right on that one. Props to you for that one. Cooked me there straight, looked me in the eye. I was like, you're wrong, buddy. Get your shit together. So thanks for that. But we're also talking about MicroStrategy. We were also talking about this was like pre-DAT. This is pre kind of DAT mania, but MicroStrategy was on. And you had kind of formulated a take around where you see kind of this space going. And then obviously we had the entire DAT craze. Where are we at from your perspective with this part of the market? Is Tom Lee going to get, absolutely BTFO'd, liquidated? Is he going to make it? Like, where are we at with DATs? Take us from like MicroStrategy all the way to like long tail story protocol DAT. Like where are we at in the spectrum from your perspective?
Yeah, I mean, the DATs were another one that I was very skeptical about. And I just knew like these things would trade under MNAV because you just have a worse version of owning the token because you have an illiquid like way you can't actually sell the token. And in some cases, the founder is blocking you. In some cases, you just have too much of a token. Like Bitcoin, ETH, maybe you can sell, you can sell like $1 billion if you have, but like nothing else. So, thankfully avoided most of these DATs. We did a few for commercial reasons, but didn't do many. And the part of the cycle, I mean, look, I did like have a concern that like one, we would get this massive like run up to 200K and this crazy mania, and that's would be the cause of it because we would just way overheat and then we would collapse. We didn't heat up that much. I mean, we did go to like, 130 and ETH went to 5K, whatever. But it didn't get like too ridiculous. And so even though the bubble burst, it wasn't like a ridiculous bubble. So we've kind of like gone through it. It's the same thing where I was warning like around the DAS event in London that I had that debate with Hasib about synthetic dollars, and I was warning that like this thing people are going to keep like, yeah, you have Athena, but then you have like people just adding risk to get more yield because it's not getting enough yield, and this is going to like blow up. And people are presenting these things as stable coins. They're like presenting them as dollars. They're pegging them to dollars. I mean, sure enough, like 2 weeks later, you just get like this collapse of stream finance, and that $100 million loss just permeated like through the entire like vault ecosystem of every single exposure of like Elixir had some of this thing, which had some of that thing, and then it's just like this like everyone was like indirectly being touched on it. But thankfully, like what I warned happened, but it happened at like a size before things got like way too big. It happened at 100 million of a loss instead of like a 10 billion loss, like like Luna did. So bottom line, like we've gone through, where are we on the cycle? Like we've had a few of these bad things that I predicted have happened. Like the DATs kind of splintered and like this stuff, but it's not catastrophic. And I don't think that you're going to see MicroStrategy or Tom Lee blow up. In essence, like these things like they still have a bid. They still have cash. They still have participation. The tokens that they're buying are actually like worth something in both cases, like ETH and BTC. So, are they going to be able to buy as much as they used to, a few months ago? Like, no. And that bid's like reduced, but it could come back. And I think like, for those two big ones that you mentioned, the game's not over. And, the assets that they're buying are good assets, and so that game will continue. But when it comes to the altcoin DATs, yeah, I mean, it's just the graveyard out there.
Yeah, it is. And so do you think that these DATs putting their, like, so Tom Lee has staked, billions into ETH now, and then Sharplink has also just recently put a bunch of their ETH into like Eigenlayer and Linea and EtherFi and whatnot. Is this something that is at all interesting, or is just kind of like because like like the trend is, okay, they can't just be holding companies. These DATs need to turn into more productive companies. I guess deploying their assets on chain is one way to do it. But is it enough? Is it interesting? Is it compelling? Or is it just meh?
I mean, look, if there are some that are trying to be like proper operating companies and get like actual real revenues and like build business, like do stuff
Yeah.
that's fine. And like you know like there's like the Aether one trying to do some stuff with compute. Like there's a few trying to be an operating company, and that's fine. The ones that are just like, oh, we're gonna stake this or put it into Eigenlayer, like those yields are obviously going to get compressed, and you can't do it on size, and you know it's not tremendously profitable or interesting to just like do that. And then you can make it more interesting if you take more risk, but then you're just like a hedge fund, and maybe you make a mistake and you like lose money because you're taking too much risk. So um, look, they have to try stuff. I mean, so many people, even like the big names of the industry, even like the Samanis and the Hasibs, who like were initially like very anti-dat, they end up doing end up doing dats themselves. So you got the AVAX one, you got the like Solana one, like these guys are on the boards. I mean, everyone's kind of like committed to trying to make the best of the situation, but it was definitely a fever dream. I think now it's pretty clear.
And then on one of your points in there about, the yields aren't enough, you take more risk and then you try to get more yield and you're kind of selling these as stable coins. Like I there's kind of this new cohort. One of them that comes to mind here is like USD AI, where it's selling itself as a stable coin, but it's going out and it's, trying to do things in a different industry and then bring those yields back to crypto, bring them back to the stablecoin holders. Are you paying attention at all to this new cohort? We're calling it like neo DeFi or neo finance, and we're these guys are going into like energy. Or we were talking to a protocol yesterday. They're doing reinsurance, right? So they're going out, they're selling insurance to insurance providers, and they're getting their capital base from crypto. And then the products that they sell obviously get revenue, they get yield, and they're just passing the yield back to the stablecoin holders. How much do you see that overlap? Do you think that is sustainable, or do you see this as, again, just the yield's never enough, you're going to have to go get more risk, and the yield that you promised to your stakeholders is going to fall through?
I think it's sustainable. I mean, obviously, you need to know what risks you're taking, and there's no free rate above the risk-free rate with no risks. So there are some risks, but there's a place for people to take some risk, and whether it's private credit, whether it's reinsurance, whether it's like financing compute, which will then hopefully have a return. Like these things are super interesting. I think going back to like the quality of like the assets that we have, like those can eventually end up once they're cleaned up and like they go through the extreme cases and they kind of survive, like there can be some decent yielding assets. It's totally fine. I mean, like there's stuff like Wildcat, which gives private credit for any company that wants to just show up and say like, hey, we have a reputation, we're Selene, we're Wintermute, we're Bodhi Ventures, and this is Kane speaking, and whatever, and here's my yield, and obviously they did have one company, I can't remember which one, but they did have like a first default, but that's kind of normal. I mean, that's part of the game. Like you're gonna have some defaults. That's why you're getting paid above the risk-free rate. So like these instruments are interesting for sure. And the RWA side, has been trying to do it for a long time. We've heard about like real estate yields and different stuff. Um, but there's some interesting things I'm hearing, like people trying to do like data center real estate, tokenization. Obviously, Canton, which we've invested in on the digital asset side, is trying to do a lot of just bringing a lot of people on chain and tokenize assets and do it natively in a way that is like representing the real asset. It's not just a receipt. So it's just definitely a space that I think a lot of people are very interested in, and including us.
Yeah, I mean, we're calling it neo finance. That's kind of that's our focus for this year, is like this category of combination of tokenization, stables, neo banks, kind of the institutional crowd. I'm going to New York again. We have a sick office space in the Empire State Building. We're locking it down. We're doing all these different things. It's very, very focused on this. It's kind of like it's aligned with what you're saying about big brands coming on chain and launching tokens, but it's in a different way. It's more just like very institutional. And it does seem like that's like the ongoing meta. There's a lot of apathy right now amongst like crypto native participants, but there's also simultaneously like a lot of bullishness and excitement from these like higher level institutional participants, like the Cantons and the teams that they're working with. So that kind of brings me to your portfolio positioning 2026, big game theory guy. What is the game theoretical approach to the market right now from the investor perspective, right? So Trump, Venezuela, QE, Jerome Powell, midterms, 4-year cycle. What is the game theoretical approach to the crypto market right now? What is your current mental model for allocating in the space? How is Selene positioned? How are you thinking about like the risk on versus risk off period here? Your buddy Taiki just closed his ETH shorts for a loss. He thinks that they're going to go lower. He had a fun short spree there. Other people are getting bulled up on going to all-time highs off of a 5% pump to Bitcoin. Feels very PvP right now. What's the game theoretical approach to the market? What's your mental model right now, given the large set of variables in front of us?
I'm expecting this year to be as choppy as last year. So there will be, some big movements up, and then like we'll have some crashes. So that's not going to change. It's going to still be tricky. So my mental model is like you find these spots that are worth accumulating during, and I think, this recent in the 80s, it just looked very nice. I think we already came, quite a bit off the top. We were super lagging traditional markets, including things like silver and like, palladium, whatever, all platinum, all this kind of random stuff. People are like shooting up to the moon. And it's just like a situation where you can easily see like a bit of a catch up trade. That said, like I said, alts are kind of broken for the most part. You just like have unlocks coming, for most of them. The major L1 tokens, I think, never really managed to explain why the token should be worth anything apart from just the fact that it has that speculative premium of like people want to bet on it that I mentioned. So like even like the large L1s, I think, are not necessarily like super clear long-term holds. So we don't actually hold much ETH or SOL. We hold a little bit, we participate in like the trading, but we hold a lot more BTC as a macro asset that I think is very relevant for today's world. We're definitely tracking the quantum thing. And when I say the quantum thing, I don't really mean like the actual quantum as much as like people's perception of what could be a quantum thing. Like, are people, I watch like these like clips on like CNBC or MSNBC, whatever. Like I want to see like what the normies are talking about. And they mentioned it. Like they mentioned, you got the guy, the random dude coming talking. And then they mentioned quantum for Bitcoin, and they're like, you're a little bit scared. Like they're just kind of like looking at it. So,
it's so good, man.
and I think it's a good thing that they're kind of climbing that wall of worry, because once things calm down and nothing happens, we'll be able to kind of have people come back in. So you think about positioning when you see that, and I think positioning might be low and people might need to position more. The main risk, like you said, is that we just get like a collapse in like equities, other assets, and then that would obviously like hurt crypto prices. So, midterms, I am expecting Trump is gonna aggressively try to juice things, either by doing some kind of airdrop check, 2K to people, or some getting Stephen Moran in place of Powell or something. He's going to try to do something. So I do expect we'll get a liquidity surge around the mid-year, and that's going to be like another buying opportunity. So TLDR, like long right now, mainly Bitcoin, some select alts that have just like sold off way too much, especially the ones with revenue. So we do have some of the ones that I mentioned, like all the ones that have revenue. We have like a basket of all of those things now that they're kind of at reasonable prices.
Yeah, I remember you were telling me like, hyperliquid at 40 or 50 here. Like, is it that interesting? Or you were kind of like, man, I was like, dude, it's gonna go to the moon. And then it went to 60, and then now we're back at 20, and it's like, okay, now it's kind of interesting again and lighter. And then you got like like Sky, Maple, even Aave after some of the drama, Jupiter, these types. That's kind of like where our focus is. What's that?
Meteora as well. I mean, Meteora is very cheap on like a revenue basis. So, yeah, we just have a basket of these things. I like Layer Zero as kind of like another one that is like a dark horse. I think like they're really starting to get some stuff together, and they've undoubtedly won the war when it comes to like some of these categories. Like the OFTs and like some of these things. So.
What about privacy, Jordi? Are you excited about Zcash as much as Arthur Hayes and Mert, or not so much?
No, I'm not. I mean, I'm excited about Canton, which has privacy, and I think the things that might enable, less kind of like forms of money like Zcash that are trying to like meme themselves. I was also like I felt the same way about Bitcoin in 2012 when I first heard about it. I'm like, are they really gonna meme something like into money? Like, I don't know. And then they did. So like, I could be wrong again.
I know it's getting late over there, but just curious because we've heard it come up, and I think they will come on the show. But why are you bullish on Canton? What's your Canton thesis?
It's the same with Lighter. Like, I like the combination of like a founder that is able to go to these like TradFi institutions, these big guys, and like sell them to collaborate and bring them on. And I think Yuval has that ability to just go to a Citadel, go to these guys, get the banks on, get these guys on. Okay, like we're doing some interesting stuff. You got privacy, we have the credibility, we have the other names, and then you just kind of get a bit of a group going, and then before you know it, like other people want to come in because of the other people are in, and that's a good way to do things in the world. It's very different than the hyperliquid thing. I like what Jeff is doing, this like neutrality thing of like, we're just like going to put the infrastructure and it's just code and anybody can deploy, and that's also cool. But like, I think you want to be barbell. You either just do like pure infra, like neutral, or you go like, okay, we're really good at like showing up and doing partnerships with all these guys and building this stuff. So they've been building this thing for a long time. And, I think at this point, there's like so many investors that are in. They've thought about the privacy aspect. They've thought about like issuing actual native securities and like the legal side a lot. Obviously, like when it comes to, things that we're used to on the crypto side, like, MetaMask or EVM or some of these things are different. So like that's probably like the main thing that they need to overcome and kind of think about how to make like the UX, let's say, like kind of more friendly.
What do you think about Chainlink? They've done all the things that Canton has done. Sergey is, one of the best founders in the space. Token just can't seem to get a bid sustainably over time, even though they are probably the most important kind of like DeFi, TradFi connector right now. Like, do you see these types of fundamental companies like ascending into the higher ranks of like top 20, top 10. I mean, Chainlink's already obviously up there, like over the 5 to 10 year period, or like do these companies have to work on like does Chainlink need to work on its token more than what it's currently done? Basically, is what I'm getting at, or is just the fundamental work that they're doing in business that they have enough to kind of allow them to basically outlast everyone? Because I think it's really a game of outlasting more than ever now. How do you view like a company like Chainlink or those that are kind of similar in the space where the token value is still, in that kind of utility-esque realm? They've kind of got some buybacks going with the Link Reserve, but nothing like programmatic or like massive, massive programmatically, like something like a
Yeah.
or Hyperliquid.
I mean, look, like I'm not a Chainlink expert. One of the reasons is like it just never was interesting for me for like looking at it from either a long or a short, because from the long side it was just always so expensive. Like I could never like really justify why this thing's trading at like many billions. And then from a short side, it's like there's much less like there's like more vacuous shit to short than like something that at least is okay. So I didn't look at it from a short side or a long side. I just haven't like dug into it too much. But I will say that like, some of the categories that they try to compete on, like the bridging and some of these things, they're not necessarily like winning in all of them. And so I guess like, there's oracles, but now there's like, people are not really like using them for most of these like financial oracles. Now they're using like Pith, or they're using, something else. And so I'm not exactly sure. Like I'm not the expert on Chainlink, I'll say.
All right, guys, quick rapid fire, and then we'll close out here. Jordi, Bitcoin above or below 150K and end of the year?
Given where we are, I would say like close to, but probably like a bit below.
Yeah, Sol above or below all-time highs around 280.
No, it's definitely below. I mean,
Yep.
like
Yep.
it's not gonna get close.
Best
Best quarter of the year, Q1, Q2, but
for crypto in general, yeah.
yeah. So best performing quarter,
I think Q2.
Q2.
Biggest sleeper like narrative or sector that people aren't talking about right now that will be hot. It was privacy in Q4. It was Hyperliquid and Perps back in 2024. End of that year, it was the AI agent meta. What is it this year?
I like I said, I think like getting some like real businesses as a tokenized asset, whether it's they're fully tokenizing the whole business, or if it's just like equity perps becoming really hot. I just think that people are going to want to bet on things that have like a real business.
Yep. Jordi, thanks for your time, man. Get some rest. I look forward to hearing about what comes out of CFC and seeing you in the city as well soon, man. Oh, wait, hold on. Before we finish, can we just have a quick couple minutes? What is the health maxing journey? Can you just give us like the 90-second TLDR? Like, what have you been up to?
Yeah, I mean, obviously, like I've been, anyone that's dealt with me over the last years is just like, dude, like, how are you fucking online 24/7? Like you don't sleep. You're always like, and I've just been pushing like very hard for years. And at some point, I think it just, I hit 40, the anxiety of like trying to run this big business and everybody, it just started to creep up in health ways that I didn't, realize until it like really hit me. So I just started prioritizing, and I think that the approach is you just need to like layer habits. And why habits? Because like habits become automatic, so you don't have to like think about them. They don't take your brain space. So if you just have like a healthy habit, you can move on to the next one. Then you just like stack them. And so like I started with something that was very easy for me, which is diet, just because I've always kind of been diet conscious. And then exercise, obviously, like is something that we lazy people like, or busy people like me, like sometimes you lose the slot that you're supposed to have. Prioritize that. And then I would say like the latest one I've been successful on is sleep. I'm quite happy. It's like the first time in years that I'm having like 7 hours a night, so I feel good. And then there's a bunch of other stuff like, just stress. If something is just like very stressful, I don't even tolerate it. I sort of just cut it out. And then the last thing, of course, is, things like supplements. And I've gone very deep in that rabbit hole. I'm a bit of a nerd when it comes to, this stuff, because I like to take information from like a lot of experts. Like what I've always done well in my life is like, there's a lot of economic projections from different people, different experts, and I just take it all and I just distill it into like, here's the most likely correct vector out of all of this like noise. And so, I've been doing that for a long time with, people used to you should take the goat weed thing. It's gonna, increase your sexual endurance, or the other. You just hear a bunch of random shit, right? So I've been doing a lot of trying to like clear up the noise, and sometimes you have to take stuff that like peptides are, they're not FDA approved yet. You got to like figure out what it makes sense, and I think I'm pretty good at that. So I've gone down that path, and at some point I think I'll try to give people, like not the TLDR, but like the long form like write up of what I found.
Awesome. Yeah, I took some ashwagandha to sleep recently, and it's been super great for sleeping, for endurance, all of that. Yeah, man. Good. I'm glad. I think you'll perform better in the markets, in life in general, feel better, be happier, right? And as you said, the big 4-0 for us. I mean, we're 15 years behind you or so, 14 years behind you, and so for us, it's more just like, don't have 20 beers, have like 10. And then get 7 hours, it's like, don't do the whole concoction, like do like a very small bit of fun and sleep, and then work out and get some sun. Right. But as you progress, it becomes more and more, you have to be more specific with it. So
yeah, the only good, I mean, obviously like your body's less forgiving, but the good thing is like you start becoming, I would say like more disciplined, and you have more like, data points, more knowledge. So in some ways it becomes easier as well. In some ways harder, some ways it actually becomes easier as you age.
Yeah. Jordi Alexander, thanks for your time. It's been an absolute pleasure. Guys, we'll take a quick break, be right back with our next guest, Nick, for AI Supercycle, our weekly AI show, and we'll be right back, guys. Thanks, Jordi.
Thanks, Jordi.
Cheers. Thank you, guys.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io. Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy.
All right. Welcome back to AI Supercycle, episode number 15, the first one of 2026, our weekly AI show powered by our friends at Near. They've just launched Near.ai, one of the only private AI LLM chat products on the market, if not the only, powered by TE's Intense, and of course, our lovely ZK technology that we have here in crypto. Chat like a therapist, like a doctor, chat like it's your ex-wife, whatever you want to do. No one's going to watch you. It's all on Near. We got Nick. Nick is a friend of the show, also a portfolio company of our fund, Good Idea Ventures, which is getting ready to be stealth launched after many months of putting that off, which was silly. And we're going to have a fun conversation about Claude Code, 2026 AI Outlook, and more. So we're going to get Nick up as soon as we are ready to go. And yeah,
Andy, have you messed around with Claude Code much as of late?
Dude, I've got it set up right on my terminal already. I'm good to go, man. I'm Claude coding.
What are you
I haven't
vibe coding?
Vibe coded anything quite yet, other than like trying to figure out Frank DeGods' subscription tool. But yeah, let's get Nick up and let's get firing. Talk about vibe coding and Claude Code and AI and more. What's up, Nick? How are you?
Nick,
What's happening, guys? Good. How are you?
Good, man. Welcome back.
Thank you. Yeah, thanks for having me. Happy New Year. Yeah, it's going to be a big year, I think.
Yeah, it definitely is. Guys, I must say, Claude Code has been all over my timeline. And before this happened, I felt like OpenAI was so light years ahead of everyone else in terms of competition, when it was just like, if you like look at like general AI, I was like, okay, Sam Altman and OpenAI, they're just dominating. And it feels like the tides are just turning hard right now with Claude Code, browser-based agent workflows with MCP, the ability for any dumb normie like me to just download a terminal, click a couple buttons, vibe code an app. It feels like the era of browser agents is here. Nick, from your perspective, what does this mean? How is this sentiment flip happening? Like, kind of give us your POV here.
Yeah, I mean, I agree. I think Claude Code's incredible. I think what Anthropic has done on sort of like the agentic coding side is really powerful, obviously. It's sort of surprising that it just kind of popped up out of nowhere because I know I personally, a lot of the company, a lot of people I know have kind of been kind of like deeper on the Claude Code stuff for a while. So I think maybe it has to do with like the new year and it being like this time of trends kind of like disseminating outside of their little bubbles sometimes, which I think is like a trend of like how different metas like permeate different pockets of society. I don't know if you've spent much time looking at the Ralph Wiggum stuff. I feel like the Ralph Wiggum stuff
Not.
has Ralph Wiggum's pretty big. Ralph Wiggum
Okay.
is it's taken like the Claude Code like ecosystem by storm, I think, in a lot of
Mm.
ways over the past few weeks. It's basically this tool or paradigm for just like setting Claude Code off on its own, allowing it to just like work through its own sort of like autonomously generated loops to an end product where I'm sure like since you're using Claude Code, like you have to jump in a lot. You have to give it approvals to run certain commands. You have to kind of correct it. You have to manage context in a useful way. Ralph solves all of it. You know, Ralph is just this like truly autonomous agent. You just set it off with, say, like a product spec if you're building something, or even just like non-engineering things theoretically, and it'll just work through to completion. And so I think that these types of developments, I think like we can talk more about like context graphs. I think have really like entered the mainstream in the past couple of weeks, which are this big development in just like LLM context settings. So I think a bunch of stuff is just kind of coming to a head at once. And 2026 is going to be this year that we see a lot of the stuff that's been predicted over the past couple of years of like agentic tooling really becoming this fundamental like force in our labor market and how we just all individually work day to day, stuff like that.
Was it context maps that you mentioned? That
Context graphs, yeah.
context graphs, because obviously I'm somewhat familiar with like context windows, and it's gotten a lot better. I remember before, maybe a month or two ago, I would say something, and it ChatGPT started to build a profile around me and started to build the context that it had on my life, and we have an organizational AI account, and so it started to kind of combine these different context windows together. So
Mhm.
what's the extrapolation from context window, context graph? Just
Yeah.
yeah, what's the significance?
Yeah, there's sort of like three layers here. There's the context window itself, which is like basically like the context that the LLM generates throughout your individual session with it. So like if you're in a single session in a single chat, it's building context. It understands what you said previously in the chat. It can recall that, use it to inform its responses. That's why it's nice to like stay in a single chat for as long as you can. Sometimes when you have these like fairly finite or time box things you're trying to do with an LLM. The problem with context windows alone is that obviously like as the context grows in a single session in a single window, the AI's quality drops off significantly. It really falls off a cliff as more context fills that window. And AI does need context. AI needs memory. It needs to pull from potentially vast data sources, like at a company level, if you have a huge amount of data that it needs to be pulling from, if you're working in like a specific domain, things like that. And so you like what's been a part of these kind of AI systems or these fully fledged AI systems for a while now is this concept of like RAG memory or just like expanding the context window by creating these like vector databases of information that when you're conversing with the LLM, it can go pull the relevant information. It can try to find the relevant information, incorporate it into its logic and it providing a response, and then have a more informed response. The problem with like non-graph based systems here is it loses this kind of like relational importance in data. It's just kind of like it's an oversimplification, but it's kind of doing like a text search or a semantic search over like the relevant data as you're asking things. And that's not how data is oriented. That's not like the optimal way to traverse data. Like, this building a company, like there's a bunch of different things. Maybe you say something on Slack here and you use some CMS or some like project management tool over here. You have two different accounts. You need to connect those accounts. You need some relational dependence between them. You need to build a relation in some sort of graph-based system between some Slack conversation to some set of to-do list items over in your project management system, whatever it is. And like context graphs have been a thing again for a little bit, but I think they're just kind of entering the mainstream from like a narrative perspective, and they expand on this like extended memory or RAG context or concept in introducing this like relational importance amongst pieces of information, which like really does supercharge the ability for AI to understand domain specific problems. It makes it meaningfully more effective, especially as you start integrating AI into, say, like your company in terms of headcount, things like that. Like companies sort of knowledge bases are massive and they grow quite quickly and they have an immense amount of relational importance in that data. And context graphs enable you to kind of give this like interconnected brain or interconnected data source to an LLM or to an AI to make it, again, meaningfully more effective, meaningfully more performant in the types of things you're doing with it. So I think like that's really sort of entered the mainstream in the past few weeks and added to this like resurgence of conversation going on around LLMs, agentic tooling, all that stuff.
Yeah. So could, just like very practically and tangibly for those in our audience who are listening and wanna, they're using these LLMs on a daily basis or
Yeah.
weekly basis. Like what is like how do you take advantage of this context graphing from a basic LLM user perspective, right? So you go on ChatGPT, you've got like, so just from my use, I've got like I have like main chat, like I have like a main thing that I always go back to, and it's built a lot of context. But then yeah, like it'll say like this chat has ran out, and you got to kind of go to the other, you got to make a new one, and the new one doesn't have context to the other one.
Yeah.
So how can we practically take advantage of the improvements here in the context graph from just like a user perspective?
I'm sure there's some element of this going on in some of like the memory integration, the memory features that have come to like ChatGPT in the UI. Claude has this now. I think Gemini probably has this at this point as well. Like there's probably some aspect of like context graphing on the back end, not just simple RAG to inform that memory. Like you're having a bunch of different chats with ChatGPT and it'll remember something from a chat maybe you had 6 months ago. It's a different chat session, etc. But it's pulling that in. There's probably some aspect of that going on. I'm not super aware of like the commercial tools that exist. I'm sure there are a number of like MCP servers now, for example, that allow you to establish your own sort of like data store that is managed in this kind of like graph-based architecture that you can simply just integrate into, say, like ChatGPT or Claude Code, any of these things. That over time it'll build this kind of memory in this data store that embeds this kind of relational importance across data. I don't know. Again, I don't know the specific ones. We've built some custom stuff internally that we use to kind of do this stuff, but I'm sure there are a number of MCPs or like similar like structures of tools that do this now that people can integrate into like their LLM flows.
Yeah, man. So Claude Code coming back here is making it, what Pump Fund did to altcoins, Claude Code is doing to like iPhone apps, right? And or like application software companies. What do you think are the knock-on effects of the ability to make deploying an application, deploying a website with like really somewhat complex code and functionality so easy? Like what is the commoditization effect? In competitive business, there's this idea of like commoditize the complement, right? So there's like you commoditize what makes someone else's business extremely valuable. Thus, you basically make their business less valuable by commoditizing the complement. And so it's a bit more clear than that. I don't know if that's the best explanation, but what is like the commoditization outlook of whether it's programming or software development or application building? Like what is the second and third order consequences of making this so easy to launch applications?
I think the really obvious one and like a very material one is like SaaS as an industry is in question. Like SaaS has built an industry around like building software as a service, obviously, like giving people these tools that like help bring efficiency into their day-to-day workflows. When software creation is commoditized, anyone can do it at scale. Like the SaaS industry itself is like facing this kind of existential threat, in my opinion. Like I think SaaS's lifetime was 98 to 25. It's like that like I think when anyone can build software tools for whatever they'd like trivially just by interacting with something like Claude Code, like what is the point of SaaS anymore? So I think that's one thing. I think like it poses this like more systemic risk, and risk used lightly here because I think there's a lot of benefits that come to this, but it like brings this really systemic change to just like software companies in general or software led businesses. Like anyone building software today, for the most part, 90+% of like any software driven business now is a castle without a moat. Anyone can can build a competitive business, there is no real defensibility to software kind of like innovations alone. And so network effects are going to move to, and like defensibility is going to move to other sectors, whether that's user distribution, whether that's like capital accumulation, if it's a capital kind of relatable business, those types of things. I think like we will see this like meaningful shift, both in terms of the businesses that proliferate, and that has downstream effects in terms of like the funding markets as well. Like it no longer is like a really profitable venture to invest solely in some like new innovation in software, because all software more or less is now just like a non-defensible business. And so I think it has a lot of big impacts there. I think like the one thing people talk about a lot, and there's like obvious like truth to it, but I don't think to the degree people talk about it, is like the labor market impact this has around like software engineering or software engineering related jobs. Like Cloud Code can replace a lot of software engineers in theory. I think it takes more, I guess, like craftsmanship or like directive settings still in making these tools like truly autonomous for it to have some like super major, super sort of ubiquitous impact on labor markets. That will come. I just don't think that's here yet. Like labor markets are going to face this really like paradigm shifting, like quasi existential risk as well. And like you get into stuff like UBI and other things to try to remedy this. Maybe you theorize around like what labor markets look like in the future in the face of this. But I think it like really does just flip a lot of these what we accepted as fundamental truths in society today on its head across all of these kind of core functions. So we'll see a lot of changing. And I think 2026 and beyond, like this stuff is only going to keep accelerating at this exponential or super exponential rate, basically.
Yeah, I definitely agree there. And like there are so many rabbit holes to get into as far as like, what are the potential outcomes, knock-on effects, as far as like the consequences of this technology. I'm curious like how someone can kind of take their destiny into their own hands. What turns someone from a good vibe coder into a great vibe coder? Like, are there certain elements that you found, certain light bulb moments where you've said, oh, this is like a nature of how I prompt a particular agent or LLM that really gets it to do what I'm trying to do?
Let me just chime in here. OX Designer put out this tweet. The formula for getting the most out of Claude Code. I want parentheses goal/outcome plus in quotes interview me thoroughly to extract ideas and intent plus ultra think plus in parentheses plan mode on.
Yeah,
what does this
all
mean,
of those
Nick? Like what
all of those are
ultra
great
think?
tips, honestly. Yeah, I mean, like it is true. Like you literally just type the word ultra think into like your prompt in Cloud Code, and it like expends more resources reasoning and like leads to better results as a function of that. like building this like Q&A pattern with the AI is another good tool. I think all of those are right. I think we're seeing like even in like the early days of this stuff, like a material dynamic range between like the quality of output that's generated just based on how you use these tools. I think there's a lot of prompting stuff like you're talking about. Like there's a lot of like smaller prompting things you can do. I come back to the context thing because I think that is like a really meaningful piece of this. I think like intelligence is only so powerful. Intelligence in the form of like these massive models is only so powerful on its own without like a robust memory or context system. I think there's a lot you can do to like really ramp up the quality of output that you're getting from these systems with robust memory or context systems alongside them, like context graphs, things like that. Just making sure it has like all of like access to everything that it needs. What I do a lot is I do a lot of like parallel stuff. So I'll spin up like 24 plus instances of Claude Code alongside each other, and I'll have I've seen this like pattern followed by others online, so that's sort of where the inspiration came from. But like you have like a one or a couple instances just identify like areas for improvement, bugs, feature ideas, etc. It enumerate those, it produce context, and then you spin up a bunch of other instances of Claude Code to then like tackle each of these things, and then a mirroring or a parallel set of instances to then review those and create this kind of like pair programming or a programmer plus reviewer paradigm in like how you're approaching like Claude coding sessions, stuff like that. I think that goes a long way. I think people like there's still I think people are doing this now a lot more, but I think there's a lot of opportunity to use like sub agents as you're working in Claude Code sessions because of the context window issue. Like if you're just talking to a single Claude Code instance within a single, for example, Claude Code session, and you're just having it do everything, it runs out of context quickly. You probably see this a lot where it's like 5% to auto compact or things like this, and then it compacts the context, and that means it basically just creates like a summary of your work in that session to then loses a bunch of quality, loses a bunch of fidelity, and then it creates a new session with that summary as the beginning. Whereas you can just trivially spin up, tell Claude Code, do all of this, break down your tasks, tackle each one that can be done in parallel in a separate sub agent that it spins up, which is essentially a different Claude session, and then work through those. So your master Claude session is using like a fraction of the context than it is if it was doing all of the work all of the sub agents were doing themselves. So there's a lot of stuff like that. I think like MCPs are like the other big unlocking in these types of workflows. Like you can get an MCP for basically anything now and just make it this like seamlessly integrated tool that these agentic tools like Claude Code are using as they're working through problems, stuff like that. And so I think there's a discovery problem there just because of how many of them exist and people kind of trying to understand what different types of like MCP tools they need, for example. But if you stack your like agentic tool of choice, like Claude Code in this instance, with like it's sort of like inventory of MCPs, the level of output you're going to get is meaningfully higher. Obviously, it's just having access to this big tool set.
And so this NCP question, MCP discovery kind of question with regards to using these tools, this is the technology that powers the Chrome browser agentic workflows, right? Those go hand in hand in some
Maybe.
capacity?
I haven't played a lot with the Chrome like browser agentic workflows.
But you saw like Frank D. God's whole viral post, right? About like the
Yeah.
cancel your subscriptions. Like you drop the CSVs and then like Claude goes into the browser for you and like, asks you questions about it, and then we'll go and actually cancel them on your behalf.
Yeah. I think what he's doing, I could be wrong. I think he's using a specific MCP to do a lot of that, and like a browser use MCP, which basically gives like your LLM access to just go use your browser like you would. Like sometimes like a headless version of the browser. But yeah, it's that same concept.
And that's
like,
happening now, right? This browser, like, cause like, right. The whole thing was, are we going to be able to book a flight with my agent? You know what I mean? Am I going to be able to like tell Claude Code, like, I need a flight, or I need to cancel this flight, or I need to, move this flight. Cause a lot of entrepreneurs have EAs, right? And they have these EAs or PAs, they do all these things for them. And it's like, sometimes they're sleeping, sometimes that, whatever. And so it's just, that concept seems like it's real now though. Like this whole give a task to an agent, have it do something in the browser for you, book a reservation, book a flight, change a meeting, etc.
Yeah, that's right. I think like the internet is being rapidly reconfigured to be like agent first. I think like right now it's browser use. Like there's tools for these agents to go use the browser similarly to how like we use them. But increasingly, like more and more of these tools are just being like rebuilt or like repackaged to be agent first to begin with. Like so MCPs are like the big thing here.
So let's like kind of loop in the blockchain crypto angle to this. Micropayments is going to be something that in an agent first internet is likely something to get like pretty excited about. Like, this idea of agentic micropayments for, tipping for posts, for getting behind paywalls, for all these different things. Just even if it's just like in the agentic first economy with some sort of crypto rails, the economy of micropayments is going to skyrocket. How do you see this kind of X402 / this general agentic first internet developing with regards to micropayments? Is there any use cases that you're excited about? Anything that you've seen in your work with Allura? Kind of like, what is the future of the micropayment based internet if we're thinking about things not from a human first perspective, but kind of from this agent first perspective?
Yeah, I think like what it does, because like AI is so much more like capable and expressive than humans. What it does from like a pricing perspective is it makes micropayments like meaningfully more viable, in my opinion. I think the reason we have such like simple pricing models for any good or service today is just like a cognitive bandwidth issue in humans. Like we pay subscription costs, we pay these, we pre-fund accounts, etc., because it would impose too much like cognitive bandwidth or cognitive overhead on the users up to now, which is us. When you have such a like a capable technology that can process so much more information so much more effectively in such a smaller amount of time, you can impose much more like granular or nuanced pricing models onto things. So I think like what we'll see a lot of companies move to is just more like a per unit pricing model. We're not going to wrap things in these like subscription costs as much anymore. It's going to move towards this much more efficient economy around exchange, because AI is just more capable. And blockchains, online payment systems, things like this, they enable AI to participate in like the actual like financial aspects of the economy and the financial aspects of society, as a kind of like first class citizen, as opposed to just being this tool that lives on the side that helps us kind of make sense of things. So yeah, like blockchain will be just the tool that all AI uses to coordinate financially, which is basically coordination in it, like in general, in the future and going forward, I think. And I think it has a lot of stuff to do with, like, we can talk about like prediction markets, stuff like that. I think like society just becomes much more speculative in nature as well. Like there's real time prices driven by speculation when AI is the de facto user and not humans. Things like this, like I think it produces this much more efficient economy in a bunch of different ways.
I was going to mention that, I'd imagine that AI itself would be one of the first ones to flip this subscription model into a per unit basis, because there's already a very core unit to these AI LLMs, which is
Yeah.
a token. And so you could just have it, the LLM would charge your payment method, fund your payment method, and charge it on a per token basis, rather than, whatever, ChatGPT, I think it's $20 a month, there's premium models, etc.
Hmm.
But so as far as what you're getting at in the latter part of your point, Nick, is that the world becomes more speculative in nature. It's not humans. Maybe humans do as a knock-on effect, but you're saying bots and AI is doing the speculating. Is that right?
Hmm. Yeah, exactly. Yeah.
Okay.
We have a speculative economy to begin with, and in that, like, if the price of an apple goes up or down tomorrow, more or less people are going to buy apples. Like there is like in fact just like an auction going on daily in our lives and in those decisions. AI is just so much more efficient that it will be able to do this in real time continuously. We don't need this like lumpy or discrete sort of like pricing update to like find the like optimal intersection of the supply and demand curve as we do today.
I feel like before we get like too philosophical, I feel like we're putting together almost like this like ultimate guide to using Claude Code. We went through prompting, we went through some of the knock-on effects. Is there anything else that you think is extremely important or significant for someone who is breaking into vibe coding or trying to improve their skills? What are
Hmm.
misconceptions or anything that is flying under the radar? Anything that is, particularly significant for someone to keep in mind?
Yeah, I think that's a good question. I think there's a lot of small tools. Like, what one thing that I think is like underused today, and I think maybe it's a function of like a lot of like the new people now getting into coding through vibe coding, just like weren't engineers traditionally, and so they like didn't have this sort of lexicon of tools that have been being used in engineering for a while. And it's very simple things like using GitHub as or Git as this like coordination layer amongst your like Claude code in your Claude coding setup. Like Git is built to coordinate amongst software engineers. It's built to like itemize different things that you're working on, create like a sensible set of like version controls about the different features or bugs or whatever you're kind of tackling. And so I think it's like a good exercise for people to like practice bringing Git workflows into their agentic coding setups, spinning up like different like work trees and things like this to like break Claude code sessions or whatever coding tool they use. I think Claude code's the best though. Like break different like Claude code sessions into these like different sort of siloed instances that they can work on in parallel, and then just like fix conflicts at times of merging things like that. So I think that's a powerful thing people can do. I think it is useful to like approach even vibe coding in this kind of multi-model setup. Like I think some models are useful for like constructing initial like product specs that you're trying to, for a product you're trying to build. Some models are better at like agentic tooling itself, obviously, like Claude Opus 4.5 at the like right now I think is the best at coding. Like I do think pulling in multiple models, like Gemini has like a really recent cutoff window, and so you can pull like more informed like real-time information to inform like tooling use and like what are the optimal like tools or frameworks or software libraries to use. Pull in ChatGPT for like some deeper research stuff. Like I do think approaching vibe coding as this more holistic multi-model problem or exercise is just a generally useful way to approach it, as opposed to just like typing Claude in your terminal and start like just jumping into coding right away. Like I do think planning is a material like element of how you produce something great from a vibe coding kind of session versus not. Um, so yeah, I think planning is important. Like I said, I think context is super important. I think like if not using Git, then establishing like at least just like a simple like file system within any sort of like repo you're using or Claude session you're using to like for Claude code to like track what it's been doing and to stay up to date across different sessions, to devise a robust plan and to update it in real time as it hits snags or as it comes up with different ideas or as you come up with different ideas, is a simple way to spin up like a tasks.md file and a spec.md file and include that alongside your claude.md file and like tackle your session that way and have it manage things there as it's going through its workflow. Yeah, there's a bunch of I think little things like that that go along the way. I think using like plugins in Claude Code is really useful. If like you have like if you're going through a regular and commands, like if you're going through like a regular flow of like fixing a bug or having it find bugs, spin up like a find bugs command, spin up a bug fix command that just has like a prompt and sort of a setup already established so that it can just tackle that in a much more like codified way. I think a lot of this stuff is stuff that people are starting to use more and more in these like agentic like coding setups, but it does have a meaningful impact on the type of performance you can get from these things.
Yeah. Man, appreciate that. I think anyone who's looking for a primer on just getting the intermediate level of Claude coding will be able to use a lot of these things. I think the 24 sessions that you mentioned is insane. Was kind of zooming out of Claude Code and getting to just like the use cases of AI holistically. It seems like programming is like the big use case. Like I know there's obviously the chat and there's a ton of other things, but it seems like Claude, like we started this kind of I was seeing this sentiment shift where like Claude was advertising on like NBA stadiums and like advertising on TV, but people kind of all knew it wasn't as good as OpenAI and was kind of like, nah, of course ChatGPT is better, 5.1 is better. Now it's like, oh wait, is this programming part of the equation so much more valuable? So I guess to both of you guys, Nick, we'll start with you, and Rob, curious to your perspective as well. Like, is programming like the big thing for AI to like figure out? Like, is that the 100x for AI companies, or is there like obviously all these other kind of like verticals that are important, but like, is programming the 100x here? And like, if so, it seems like Claude's winning.
I think it's like it's kind of like a heavy, somewhat philosophical question to tackle. Like I do think it like reshapes all of society. Like AI is just like this kind of new paradigm of compute that will replace most of like the like predecessor forms of compute that society runs on today. I think when you think about like what has the like most leverage in terms of input to output, coding is like has one of the like largest like leverage factors, for lack of a better term, in that like if you write some like post or some manifesto online, the level of impact it can have is maybe a like a couple orders of magnitude, maybe it's 5-10x, whatever it is. When you like build a piece of software, it has the potential to like affect thousands X of value. You know, like we've seen this in the software industry over the past 20 years in general. Like when someone builds a piece of code, it's very little capital, very little resources that go in, and massive amounts of capital that's created as a function of it. You know, massive amounts of value that's created as a function of it. So I think, just like practically speaking, AI being pointed at this problem of software engineering is this super high leverage vertical to focus on. And yeah, in that regard, I think in a lot of ways, Claude is winning in that. I think they made the right strategic decision to like focus in more on that, as opposed to being ultra general and kind of like maneuvering the idea maze more slowly, as maybe some of the other companies did. And I think as a function of that, their lead does have some like merit to it and some defensibility to it, I guess, rather. So yeah.
Yeah, Nick, I really like the idea of leverage factors as far as like where to allocate time, resources, compute, you know, where can we target and aim AI at, and then, you know, which ones of those areas are going to have the most impact on society and most value created, because it's probably not words. And we've already seen, you know, AI slop on social media and whatnot. And so I think, you know, coding and software creation has an incredibly high leverage factor. I also think that like deep math and scientific discoveries is going to be a little bit later to get off the ground, but just the sheer amount of research that these things can do and analysis that they can do by going back and and they can survey data, they can look through academic papers, and they're already starting to make discoveries in some of the, you know, toughest math problems that have gone undiscovered. They're starting to crack these things. And I do think it takes longer for those to reach the market, but there are significant multiplying effects as far as what source of value those discoveries can lead to. And I do think it's primarily theoretical in terms of math, science, these different areas of focus. But I would put those areas up there with coding in terms of leverage factors as far as what kind of value can be created for society after those discoveries are made. It just takes longer to come to market.
Yeah, I agree with that for sure.
Nick Emmons, have a great 2026, man. Hope to see you in New York. Thanks for coming on today. Absolutely fun session. AI Supercycle. It's Claude coding year. Apparently, it's vibe coding year. It's the year of vibe coding.
Nick, before you take off, give us like just a quick update on Allura. Like, where are you guys at, and how are things going?
Yeah. I mean, like, we're like, the network's live now. We have models coming onto the network. Allura, for context, is like this kind of model aggregation layer to like pull together a bunch of different models, enable them to like learn off of one another and like collectively solve AI problems in this kind of like multi-model format. And we're seeing a lot of integration and a lot of stuff starting to go live in this Q1 in the like AI X DeFi sector. And especially like we're seeing a lot of stuff in prediction markets. Like there's a number of like quite successful agents that are, for example, trading on Polymarket, leveraging like collective price predictions from a bunch of different models on Allura to trade these like 15-minute, 1 hour long binary options markets. That like there's work being done around sports betting markets that'll come live later in Q1, start to expand into other types of markets. There's a lot of stuff being done around like AI powered strategies or agents on perp dexes, these money markets in DeFi, a lot of stuff like that. Just because I think like the impact AI can have in the immediate term most effectively within like the crypto sector is in like leveling up the quality of market participant that's interacting with a lot of these like DeFi systems and these kind of new types of markets that are being spun up. So like Q1 and Q2, I think is going to be all about like this like next gen of AI powered DeFi infrastructure and AI DeFi agents, basically.
Incredible. Yeah, Nick.
Yeah.
Let's have a great 2026. Thanks so much for coming on, man. And we'll see you again real soon.
Yeah, thanks for having me, guys.
Cheers, buddy.
Cheers,
see you soon.
See ya.
Boom. That is AI Supercycle number 15, first one of the year, our weekly premiere AI show powered by Near. All right, guys, quick break. And we've got Tristan from Bullet, their upcoming mainnet, perps, landscape update, lighter launch, hyperliquid, perps, all the perpetual pulse.xyz teams. We're going to talk about it. We're going to talk about Bullet. We're going to talk about scaling perps on Solano. See you guys in just a second.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Ladies and gentlemen, we got Tristan, co-founder of Bullet, talking to State of Perps Dex Market. Tristan, GM, sir. Hello, hello.
GM, good to be back on the podcast. Really appreciate you having me on.
Yeah, man. Big quarter for Bullet with mainnet imminent and other interesting primitives coming. We've had quite the year, or quite the last 6 months in the perps market. Post 1010, we've seen OIs across the board really get ruptured. Hyperliquid is about 15, 16 bill as of today on perpetualpulse.xyz, guys, my favorite perpetuals tracking website. Hyperliquid's at 9 bill, Astra at 2.5, Lighter 1.3, and then the kind of list goes down there. So OI has not yet really recovered post 1010 across the board when you look at the entire landscape. Volume, however, has gone down, but been less of a dramatic impact than OI has over the last 6 months or so. I think 1010 really shook the market a bit. With that context, Tristan, what's this? Talk to us about the state of perp dexes. Where are we at in the perp dex market? Obviously, we've gone through the big points farming, the airdrop craze. There's all these farmers. I think it's pretty saturated. I don't know where your head's at. What's your take on where we're at? What's the state of perps?
Yeah, that's a really good question. I would agree with you. Like, it's been a very hot narrative for the last 6 months at least. I think it will continue to be that way. Obviously, given that Perps, I think, has a lot of staying power as one of these like real utilities of crypto. Sometimes we go through all these cycles and try and figure out what boils down to what do people really love to do day to day. And I think trading and Perps it's such a crypto native product that make a lot of sense. And it's been good to see a lot of these new platforms coming to light and actually, I think, start to take over a little bit of that centralized exchange market share. We continue to see that dominance actually grow. I think it's nearing almost 20% at this point going to DEXs, which is a far cry from what we saw multiple years ago. Obviously, the history of that is Hyperliquid came in and kind of set a lot of the rules there or set a lot of the precedent. It's been really good to see. I think a lot of people had questions around LIDA and how that launch would work and whether that Hyperliquid playbook could be replicated. And I'd like to say that I think they've done quite a good job. I think they had a fairly successful launch, and I think that airdrop went off pretty well. And I think so far the feedback for their platform at least has been quite good. And at least I'm quite happy to see that because they've also been going down this layer 2 roadmap essentially for perpetuals trading, also doing a ZK rollup. So it's good to see that validated in a way and see more people kind of building down this roadmap. And now I think people are looking to the future, like what are the new platforms, like who are the new players in the space? There's a bunch that kind of come to mind that are all tackling it in different ways. And obviously, we're trying to carve out our own niche within that space as well.
Can you give us a sense of how sticky or mercenary the liquidity in the perps space is right now? Right, because there's one on one side of things, you see obviously OI, crashed after 1010, but on and another reason that OI has slipped is because this playbook is, farm the points, get the airdrop, move to the next platform, farm the points, get the airdrop, move to the next platform. And it's very mercenary in that way. Do we see sticky liquidity in pockets in the perp space, or is this the trend? It's just rinse and repeat. How do you see this dynamic?
It's a great question. I mean, I think the reality of it is there is a finite amount of liquidity out there, and not every platform can have an infinite amount of liquidity. So it will kind of concentrate to, I think, the main players who can deliver a really strong product that traders want to use at the end of the day. I think the counterpoint to that is people said this about platforms like Hyperliquid, essentially. They did their airdrop, and I think, if anything, they had more success post-airdrop, and they managed to build up this really sticky cohort of users. I think the liquidity there is really robust and really solid, and better than what we've seen in a lot of DeFi platforms, in the kind of years of late. With LIDA, I think they obviously had a little bit of a drop off, but I think they've still managed to retain quite a healthy level of liquidity that I would consider quite good. So I think it really depends. It will kind of concentrate to the major players. Like I've said as well, a lot of good faith was lost in centralized exchanges off the back of 1010. And I think for the most part, decentralized exchanges did fare a little bit better with that. So having your kind of custody of your own keys, having a lot of these systems that kind of run in a more decentralized manner, I think does really help when you care about the trust aspect of things. And I think that is the kind of emergent trend over time, that you're going to see more liquidity, more open interest start to pull to these DEXs over time. Obviously, there will be some transient ones where people are kind of moving between and some level of mercenary capital, but the goal there is to really find those long-term traders and double down on them.
All right, man. Talk to us about Bullet's strategy here. Obviously, building out as you said, a ZK rollup on top of Solana to basically scale Solana's perp strategy. As we know, perps require an insane amount of throughput, as well as just general just force to make this thing work. I mean, we're talking 10, 20, 30K PS here across some of these exchanges. What's the technical strategy? How have you seen this play out so far? And just like generally give us a product update.
Yeah, for sure. So I think the kind of lay of the land there is essentially a lot of perps exchanges have moved towards kind of app chain design. If you look at basically the top 10 by volume and open interest, I think you'll largely see that as the defining feature of a lot of them. That was basically the thought in our mind a year and a half when we basically moved in the direction of Bullet to build essentially our own kind of network extension on top of Solana. We wanted to be able to control the execution, get that kind of TPS number, like you mentioned, north of 10,000 TPS, as well as bring the latency down, which is very important for perps trading. And that was really challenging to do entirely on the L1. This is something that we had tried for multiple years and had difficulty scaling. And so with Bullet, I'm really glad to see that like in our testnet and especially the mainnet kind of private beta that we launched, we're able to get kind of north of, I would say, 5,000 transactions per second, which is like a really good starting point. And we're also able to get the latencies down to something that basically we've never seen before on a DEX. So if we're measuring the end-to-end latency once transactions actually hit the sequencer, we're able to do about 500 microseconds now to place a trade, essentially, which is pretty much on par, if not faster than centralized exchanges, which I'm quite excited about. And to be able to do that at 5,000 TPS, I think, and north of that, that really gets us to the level where we're competing with centralized exchanges. And that's always been the thing for me. I don't want DeFi to be this little play thing that people don't take seriously and kind of just trade on, you know, for example, for points or just because they feel like it. I want this to be a viable and serious competitor to centralized exchanges and to bring liquidity and price discovery on chain. And so that was a big reason why we built what we built. And we were also trying to fill this void in Solana, essentially, where you've probably noticed the narrative of the last year is there hasn't been a very strong perps competitor on Solana, which is quite surprising given that spot volumes, you know, meme coins, all these other things are very strong and robust on Solana at the moment. But perps volume has definitely been kind of lacking compared to the rest of the market. So given we're very close to going live and I think have been pushing very hard and shipping very quickly over the last year or so, I think we're probably in that pole position essentially to capture that opportunity. And so I'm very excited, obviously, in Q1 to get this out there and get that in the hands of traders and bring as many of these Solana traders over to start trading perps as we can.
It's an exciting position to be in. I'm curious, a more technical question. It's like, for a long time, it was thought to be the case that decentralized exchanges would never surpass the throughput of centralized by the nature of that structure. But I take it that maybe the secret sauce is in the ZK. Could you just describe what has been the technical unlock that has allowed you to achieve these levels of scale, this level of TPS? And, you know, where are you? Do you think it is achievable to ultimately take a DEX, even though it's decentralized, and make it more scalable and have more throughput than a centralized exchange?
Yeah, this is a fantastic question. And to be honest, I always ask myself, you know, when I'm kind of like sleeping at night, why didn't I build what I built, you know, let's say even like 2 years earlier? And the really simple answer to that question is the technology just wasn't there. That's what's really changed, I would say, in the last year. And what was kind of the watershed moment for us was we kind of partnered up with the Sovereign SDK team and the Celestia team to essentially brainstorm how we could build this kind of high throughput chain for perps. And so one of the unlocks was obviously the kind of Rollup technology, I think, has matured over the last couple of years from first gen rollups, I would say, with, you know, Optimism and Arbitrum. And now we're getting essentially these kind of second generation of much more app specific custom built rollups like we have at the moment. The entire stack, the sequencer, the full node, everything is written from the ground up in Rust. Everything is basically like thought about from a performance perspective. And we've kind of engineered a lot of things just to get maximal throughput through there, bring as much latency down as we can. So there's kind of like a whole redesign of that paradigm, building things from the ground up again. In terms of actual kind of throughput of the DA layer, that's where Celestia comes into the picture. Since we're pushing 5,000 to 10,000 TPS, we need multiple megabytes a second of bandwidth. And that's thankfully something that Celestia is starting to hit on their product roadmap and their scalability roadmap. That's been very cool. And then the last point, which you mentioned, is ZK technology, which comes into the essential like scalability properties and the security properties there. That's something that has been too immature, I guess, in previous years, too infeasible in terms of cost prohibitiveness. And now ZK is just becoming much and much more proliferated. Costs are coming down, you know, by a factor of 10x, I would say, every 6 months to a year, if not faster than that. So this tech has been in kind of research mode for many years and now is becoming production ready. And that's what's really enabling this second generation of ZK rollups, such as Bullet, such as Lighter, and many others.
Yeah, man, definitely. And it's happening quickly and it's important for the entire space, whether it's Zcash, whether it's perps, whether it's the combination of all the likes, it's coming and it has a very important part for Ethereum as well. Talking about ZK, EVM, the L1. So we're definitely excited about that front. When it comes to mainnet, what is left on the roadmap to ship Bullet mainnet for people to be able to use it in full production? Where are you guys at on the tech roadmap, product roadmap? What's your timeline here? I know it's tough But what can we look forward to leading to mainnet? When's it coming? I'm sure you're super busy.
Yeah, we have been super busy, obviously. Even over this Christmas break, there's been a lot of stuff to ship. So currently where things are at is we're roughly feature complete, I would say. We have perps, we have spot trading, and we have portfolio margin. I would just kind of call out that, yeah, for example, these things have been, starting to be built, I guess, on some other platforms. Like a lot of these other perp exchanges are just perps. Lighter still didn't have spot, I think, until very recently with their kind of token launch. Hyperliquid is kind of only just kind of starting to get their proof of concept of portfolio margin out. So we've kind of shipped all these things and have basically spent the last year building a lot of them out. They're all ready. Like I said, we kind of had a soft rollout of a private beta of our mainnet going out in December, and we got our first 100 traders on, essentially using the platform. Everything has been really smooth, and that kind of gradual rollout has been really nice. We're looking to go out progressively to bigger and bigger audiences and bring on referrals and some of their friends of friends and kind of grow that group in a sustainable way. So I think the call to action there is if people are big perps traders, they want to use the platform, definitely get in touch with us on our Twitter, and we can kind of whitelist you essentially for access. We're focusing on big traders, liquidity providers, market makers essentially to get live. In terms of product roadmap, like I said, pretty much most of the stuff is there. We're just polishing off the Celestia integration and starting to get those blobs onto mainnet. As you would have seen, there was like a bunch of testnet activity where we were getting like a lot of throughput there, which is really cool. So some load testing. And then otherwise, yeah, I would think things are in a pretty good place. The big thing that we're focusing is less on the core engineering stuff now because it's done, but more on liquidity. So working with these market makers, making sure that markets will be quite liquid when things go live, working on APIs and integrations and hopefully soon builder codes and stuff like that. So external front ends and other people can start integrating. So if there are traders out there, now is a good time to start talking to us and start looking to integrate. If you're a front end, a trading terminal, some other kind of trading app that wants to build on top of us, that's going to be on the kind of short or the kind of medium term roadmap as well. So it's a good time to be chatting to us and kind of starting to get around our APIs. And then if you're a regular guy, I would say also points should be going live quite soon. The earlier that people get in, obviously the opportunity is better because things are a bit less competitive and a bit more exclusive. So that's why I kind of urge people that like the earlier they get involved, the more exciting the opportunity and the better it is for us to get that feedback from really good traders early on in the process as well.
Beautiful. What is the user experience going to be like for a Solana user? So like, right, I have a Phantom wallet. I have, my Solana wallet. Obviously, I'm used to SPL tokens. I'm used to interacting in the way like, it's a whole different experience than using EVM, for example. But because you're kind of like this network extension, does that change my flow? Do I have to bridge to Bullet through like a bridge app? Can I just connect my Solana wallet? What's like the user friction like?
That's a great question. That's like the one trade-off, obviously, of using a layer 2. We get all this great performance, but some of the kind of composability, at least the atomic composability is traded off. So there is kind of a deposit flow and a bridging flow there, essentially. We do try and use all the same cryptography and should basically have the same integrations with a lot of the Solana wallets. So we've been testing, for example, Phantom and Backpack and Soulflare and a bunch of other ones. Also, like a lot of our flow runs through Privy. So a lot of the time you just use passkeys and you don't even need to worry about these wallets whatsoever. And so, yeah, we're trying to make that process as frictionless as possible and make it really seamless for Solana users. When they deposit, we do have this kind of integrated bridge flow in the background. So it will take about 15 seconds to bridge in, but we think that's quite acceptable at the moment, given that people who are used to doing it on the Optimism or Arbitrum side might take 15 minutes. This should be much faster. We're also working with a bunch of bridge providers who do these kind of intense-based bridges. So we think once we integrate one of those, we can get basically, maybe like sub-second, essentially, like deposits as well. But that will be coming in the next month or two. But yeah, that goes to say that I think it should be relatively frictionless to wait 10, 15 seconds to get your money in there and then get basically like sub-millisecond trading, I think is a worthwhile trade-off.
Beautiful. Well, Tristan, man, I wish you the best in the next couple of days into weeks. And I know it's going to be a crazy, crazy push here to mainnet from the dev side, from marketing side, product as well. It's a journey. So enjoy it. And I know it'll be good for you. Thanks for joining us today. Enjoy the time in SF. And yeah, man, it's always a pleasure.
Yeah, thanks a lot for having me on. Really appreciate the support, and looking forward to going live and showing you what kind of product we can build.
Beautiful.
Absolutely.
Let's go, Bullet. Let's go. To the moon. All right, Tristan.
Thanks, Tristan.
Have a good weekend. Happy New Year, man.
See you guys. Yeah, you too, guys. All the best. See ya.
Bye. All right, guys. Up next, we've got the lovely fellows from Framework, Vance and Michael. About 45 minutes with the boys, and then it's the weekend, guys. So how are we feeling, Rob? Feeling any better over there? Not so
yeah,
much.
we're moving and grooving, brother. Let's go. I'm gonna ask Michael and Vance how long till they're speaking English in Venezuela.
So until we're buying oceanfront property in Venezuela.
Yeah, if they've bought any
and importing the Latinas.
any any real estate purchases out there. Well, we should get the guys in very shortly. Neo Finance is all over the timeline.
Yeah, the insurance company yesterday was super cool. They were quite bullish on their own product, which you like to see that. You know what I mean?
I mean,
so,
if you're not bullish on your own product, what are you going to be bullish on?
I'm not exactly sure if I'm being honest with you.
I'm bullish on Neo Finance, and
let's start there with these guys. Let's just straight Neo Finance build them and see where we end up.
Sure, let's do it. I think Neo Finance is a great place to start because it's really where all roads lead to Neo Finance.
Yes, all roads do lead to Neo Finance, and it's where the space is going, man. It's so obvious.
It's not only what we're building, but it's what the entire industry is building. And it's almost like whether they know it or not, they're building Neo Finance. We were on a call with a partner earlier today, and this team was talking about, the teams that are straddling between Web 2 and Web 3. And, people I think have chosen to build in this domain, but this is a convergence point. And I think if you haven't already started to build in this this cross section of Web 2 and Web 3, you're going to be forced to do so. And obviously we're calling this Neo Finance. We have, a strong reason as to why we believe this is the cross section of the next. I
mean, it's just like the intersection, right? It's like the intersection of legacy finance, DeFi. It's happening.
It's not just the intersection; it's the evolution, right? Because I think what's important to understand is that there's this old guard, and there's an old guard not just in finance, but it's also in crypto. This crypto native infrastructure L1 slop, Neo Finance. I think it's an evolution of both. And you're right; it is an intersection because it is both. But I think it's also an evolution of both.
All right, well, let's see if we can
Neo
Finance pill these guys. They're already quite pilled, but I think they're gonna like what they hear. So let's bring them up. We got Vance and Michael ready to go. Stoked to end off the week with the lads. It's been maybe a month since, so lots going on, lots to talk about. Gentlemen.
Good to see you. Just take us in.
Happy New Year, Vance. Good to see you.
Welcome back, guys.
11 a.m. here in Hawaii. So, yeah, man.
Shit. Need to my tax off. You on island time?
A bit, yeah. I mean, I've been on like a mental, physical, spiritual growth phase. Less on the business, less on the markets. So it's been healthy.
Wow. What have you learned?
I've been reading this Book of Zen. And I've learned that fullness and emptiness are the same. And the difference between a man and a Buddha is that one realizes that there is no difference. It's deep, man. It's deep. This is sober. This is sober, too. This is not like...
I was about to say, how many months?
Yeah. Well, boys, Happy New Year. Rob and I started off kind of talking about this Neo Finance category. We want to bring it to you guys, get your take. Obviously, you guys have probably invested upwards of, 10, 20, 30, $40 million into this sector and have some of your largest positions in the sector, upwards of 500 million. I mean, I think you have 9 figures exposed to Neo Finance.
9 figures, 10. What are you talking about?
Wow, your size is not size. All right, so Galaxy Digital.
We are the ones, we didn't create the term, but I'd say we're the ones that we popularized the term DeFi. I think it's also fair to say that it's probably time to shut that one down. I think it's, been a good moniker for everything that's going on. The reason why, when you floated this to us, and we've been trying to think of different names for describing what we do, we're at the convergence of fintech and decentralized finance. DeFi doesn't hold that meaning anymore. And so Neo, I think, is being, something new, but it's a new description for what we're talking about, which is the convergence of financial technology, financial institutions, and decentralized technology. Yeah. So I like it. It's a good term.
So Vance, you put out this tweet here, right? Persistent buybacks, maximum financial discipline by protocol, stablecoins, RWAs, lending, capital markets, doing less, doing better, walking the regulated path. Mike, as you're saying, it's this convergence between the entire financial system, legacy finance, not TradFi. We don't call it TradFi. It's legacy finance and DeFi, or fintech and DeFi. The Galaxy Digital CEO, Mike Novogratz, pushed that there's this kind of shift happening to business-driven tokens away from narrative-driven tokens, measurable value and profits, wallets and exchanges evolving into these neobank-like platforms. We have, it's kind of like this new superset of fintech with consumer front ends, DeFi back ends, business-driven tokens. We expect an institutional bid on these DeFi blue chips that, have this sensible value accrual. So just kind of like throwing things your way.
Well, Andy, one more thing I think is important to mention here, and it goes back to what Michael said about how DeFi is no longer the moniker that applies to a lot of the emerging technology and apps that we think are going to do extremely well, because it's no longer decentralized for decentralized sake, which is what I think a lot of teams raised on when they got into crypto. And that is no longer going to get them the dollars that they're looking to raise. So I think what Neo Finance is doing is it's taking a more pragmatic approach. It's saying decentralization works when you use it the right way. But really what consumers want, they want a forgot password button. They may never get sold on self-custody. And so DeFi is kind of this old term, and it's time to grow up, and it's time to realize that if we want mass adoption with all the hand wavy things that entails, there's a new way of building and there's a new way of thinking about crypto in this modern era.
Can I propose something?
Please.
I think instead of calling it Neo Finance is the full term, just like decentralized finance is, I think you got to call it NewFi. Because that's really what it is.
NeoFi.
NeoFi, I think, is a little wordy.
Yeah.
NewFi, in terms of the shorthand, I think is a much better description, and you could even write it out as NEFI. But I think having it described as NewFi is really probably the best description, Robbie, going back to what you're talking about, which is it's not decentralization for decentralization's sake. Users, I think, don't want to self-custody in a lot of ways. They want to entrust in security and a third party to manage it. They just don't want the people who they're entrusting to do bad things with it or do things that they don't know that's happening. And I think, describing this as NewFi is kind of like calling, Web 1 to Web 2, Web 2 to Web 3. Like, it is an innovation. It's an improvement on what we're doing. And it's like a step 2 for finance. And I think that's really kind of what decentralized technology applied to financial technology will bring, which is a step change in terms of, all the different applications and what you're able to do with it.
Yeah.
I also think people have co-opted the DeFi term for bad purposes. Like Ave always saying like DeFi will win. Dude, like they delist the third largest stablecoin. They have this committee to list you, and if you tweet badly about them, they won't, up your supply caps. Like there's things that are DeFi and there's things that are not DeFi. And just like these bad actors have kind of blurred that line. And I think the whole term is kind of cooked, and we either need to refound it and kind of actually call things decentralized that are decentralized. Otherwise, it's just going to be co-opted as a lame marketing term. So I'm not even sure what to call what we're currently doing. But when Sky has $10 billion of money, we should probably figure it out in terms of like what we're actually going to call this category. And you can call these things like capital market stablecoin or decentralized stablecoins or whatever you want. But I think the really powerful thing about maybe like open finance, maybe new finance, is that there are massive returns to scale. And that's probably the key point that a lot of people don't understand, is that you see these things, they kind of look like rinky-dink toys at this current scale, but what happens when Sky has 50? What happens when Sky has 100 billion of actual assets under management? The massive returns to scale and the democratization of being able to govern that is truly what I think the quote unquote DeFi opportunity is or was. But a lot of people in crypto and DeFi and decentralization theater just got too high on their own supply and built things that either people didn't want to use or didn't have the massive returns to scale that characterize why crypto is powerful. So I'm with Michael in terms of, we got to figure out something else to call this, but neo finance, new finance, open finance, all good candidates. I'm personally hopeful that we can resurrect DeFi and have it actually be something that means something.
Yeah. So kind of then moving away from the specific nomenclature here, thinking about like the thesis at large, I think obviously you guys have spent a long time thinking about this and then obviously allocating towards it. So like what is the thesis in a nutshell for this category, right? You guys are obviously bulls on Sky, on Syrup, and on the likes. There's this category that is bridging institutions on chain. They've got a very clear product market fit. They have tons of capital, and they're doing things in a different way than just DeFi. Michael, Vance, what is the NeoFi thesis here? What is the new finance thesis in a nutshell, away from just kind of like the terminology here?
What I would say is that it has very little to do with decentralization. I think decentralization is a means to an end. You can think about it this way. Money transmitter laws are a hugely influential and hugely consequential piece of legislation within the US. And it basically, adjudicates who and who cannot move money around. And Vitalik comes around, builds a decentralized blockchain with smart contract functionality, and it just makes that concept irrelevant. And so I think there's some of that in terms of what we're trying to do with DeFi here. And really, if you think about like a decentralized stablecoin, it's not a decentralization theater in terms of like the cypherpunk vision. It's decentralization in terms of risk management, in terms of transparency, in terms of people being able to understand what yield they will get on what cadence and in what format. And I think that's probably the best of DeFi. But when you think about what we are specifically bullish on in this category is that, stable coins and asset management, Sky and Syrup respectively, and I would also say Spark, have this very narrow path, but a path to connect to TradFi. And the language that TradFi speaks is inflows and AUM and ROI. And that is exactly what Syrup and Spark both offer this landscape. And so that's why I like NewFi or NeoFi. But really, if you combine the massive returns to scale of a decentralized system with the ability to connect to TradFi, that is the opportunity here. And that doesn't really cut across to things like derivatives, because that's like so heavily regulated on one side in TradFi and completely unregulated on the other, and even kind of spot trading as well. So I think the actual opportunity is specific to stablecoins, asset management, and lending. And that's really what we're bullish on. Massive returns to scale, being able to connect to Wall Street to accelerate that flywheel.
And maybe just to add a little bit and using the same analogy, we actually were asked kind of this question at a panel that we were on a couple of days ago. Using the money transmitter example, I'd say that's movement of money, payments is kind of like what that category is. And you used to have money transmitter laws for two reasons. One, because you had to entrust customer funds in a centralized black box entity. Like, I'm going to give this payment processor all of my money and hope that they move it, but when I tell them to move it. There was also people who ran off with that money, which is why the laws exist. But the other element is KYC. You have to know that you're sending the money to someone who isn't a sanctioned, terrorist. And when we think about what an Ethereum, network enabled, it enabled you to not need the money transmitter laws for one reason, which is you don't have to put trust in a centralized entity to move money around. And if you look at, and that being said, you still have to have rules. There's still rules around you can't send money to North Korea because that's against the law in the United States. But if you use stablecoins as an example here, you look at stablecoin volume transactions, and it's gone from basically 0 5 years ago to Visa today. And that scale is unprecedented in basically any other financial market, in any other growth sector for finance or financial technology. Like that is a 0 to hero movement in record time at venture scale outcomes, similar to what we're seeing, in AI these days. Like it is that level of unprecedented growth. Now that's Ethereum and that's stablecoins. If you were to apply that same process and logic to every single other category of financial institution, whether it's, as Vance said, lending, trading, banking, insurance, all of those categories will experience similar trajectories of growth if you bring about decentralized technology, because it will provide a global scale and finance truly moving at the speed of software that we haven't seen before. Where we got things, I would say, misaligned or out of whack was the expectation that we have to be fully decentralized to do it. And it's actually not the case. You still need laws, you still need institutions, just like you still need KYC for payments and stablecoins. But if you have one element that allows for the speed and basically the government regulators to agree with you and see the value in this, they're going to come about, recognizing this as a huge boon for the financial services industry, just in the same way that they passed Genius and that we're excited about stablecoins. You got the Treasury Department saying we're going to 10x in 5 years. Like, that is, I think, the best analogy here for what the potential is. And so we're just at the start. We've done payments and we've done stablecoins. What about every other category of finance?
Yeah, we're seeing it happen, and I think this is the reason why we're seeing a lot of the institutions that are starting to take. At first it was they put their toe in the water, and now they're ready to dive deep, and they're doing so with tokenization, because that feels like the unlock that brings a lot of their services on chain, and ultimately allows them to then process their financial stack at the type of software scale, Michael, that you mentioned. This is something we've thought a lot about over the last few weeks as we started to recognize more and more, and we saw the juxtaposition that was happening in the institutional world, the legacy financial world, and their break point into this space. So I've been trying to think about, like, what are the potential holes in this thesis? And one of the ones I keep coming back to is the 2021 to like C DeFi, like offshoot, where we had the Celsius, BlockFi, liquidity contagions, and we had centralized front ends and decentralized back ends, and they were serving DeFi yields to regular consumers. And it feels similar to what we're talking about, but I think there's a fundamental difference. And it's essentially that the yields are sustainable. So I'm just curious if you guys have also thought about this. What makes this different from that past regime? And why do you think this is a more sturdy and bulletproof thesis now than it was a few years ago?
Well, first and foremost, every single founder of those companies that you just mentioned are in jail right now.
That's right.
So that's one. Let's call a spade a spade. Fraud was going on during that period of time. And I think broadly what we now have is, and what we're excited about, Spark, Sky, Syrup, they're all doing amazing things on chain. The stuff that we've invested in and announced recently, whether it's the DeFi product where you're doing energy and basically a decentralized utility that generates yield on chain from solar and storage on residences throughout the United States, or you're talking about USDAI, which is enabling, GPU backed lending as a new business model that brings on chain. Like, that yield isn't like endogenous to the crypto industry. It's not, we're just trading back and forth with each other, or we're, giving you these tokens that have an asymptote to zero over time. We're talking about bringing real business models, real business activity that's happening off chain, on chain. And that's where the yield comes from. Like, that's a fundamentally different perspective.
We had RE Protocol on yesterday talking about the reinsurance market. Another really good neo finance example there.
Another framework portfolio company.
I just keep coming on the show. What the hell, man? So that is actually, so this idea of, and Rob gave me this thesis, like, dude, I'm actually pro centralization. And I sat on this for like 2 weeks and I was like, dude, we cannot come out and be publicly saying that we're pro centralization when we're running a crypto podcast. And then now that we think about it more and more, the regime that we're in is actually enabling that, right? And so this is a good segue into this market structure bill voting next week and into like the midterms and all of this, where, we built a lot of these systems based on regulatory arbitrage for the previous regimes that we were in. Obviously, this new one is much more friendly towards crypto regulation and innovation as a whole. We've got this market structure markup bill vote happening next week, also midterms at the end of the year. How do you guys see the evolution of just like this general category and the space at large as it pertains to the market structure bill? You know, what are like the pros and cons of that in Genius as it relates to Neo Finance? And then coming into midterms and even thinking like further out to the next election cycle, how do you guys kind of posit around this centralized front ends, decentralized back ends, or this kind of general shift towards this newer approach? How do you see it changing? How do you see it evolving here?
I think there's going to be numerous regulatory pathways for people to be non-securities and also deal in new financial products like tokenized stocks or tokenized bonds, be it Clarity, be it the SEC Innovation Hub, be it other avenues. So I think there's going to be a variety of avenues. I think the cost of compliance is going to be meaningful, or frankly, like the ability of space to get into like an SEC Innovation Hub or other kind of sandbox type environments. So it won't be for everyone. There's also going to be a difference between people who have already launched a token or a product and you know, probably are thinking about it as we're establishing like a US branch, kind of like a USAT, versus people who are more, you know, just like evergreen entrepreneurs and starting out and wanting to do things at small scale. I think there's going to be a question as to, at the end of the day, what does being a non-security get you on top of all the hurdles to get there? And if you are, you know, deemed a security, what happens? And I'm assuming that, you know, a lot of the current tokens on Coinbase will probably be deemed securities at one point or the other. And I think what their strategy is, frankly, is to kind of have a broker-dealer license and be able to trade those things, you know, right next to coins. But it's a shitty outcome because, you know, if you are a, you know, public security, but you're listed on not NYSE or not NASDAQ, but like the Coinbase alternative broker-dealer, that's like a pretty tough position from a liquidity perspective. So I think there's going to be some tough times for some tokens, but for the other tokens, they will generally be held to a very high standard of decentralization and education as to what they do. And they will either graduate from the SEC program or they will kind of be non-securities on day one of Clarity Act. For everyone else in the middle, there's going to be a lot of work to do. And for a lot of entrepreneurs, I think they're going to see the path of just being a normal private company may actually be for them. Once everything is laid out in front of them, it's going to be easy to tell versus today where it's kind of like this nebulous journey, which seemed to be very valuable because you can launch a token, but there's really no actual regulatory hurdle. So, you know, point being is that there's going to be winners and losers. It's going to be a pretty winding path, and it won't all happen overnight, but it will be good for the space. The worst thing that can happen is that we're still stuck in this no man's land of like, nobody can buy what we're selling because nobody knows what it is.
For those products that, you know, they're going outside of crypto, so they're avoiding that endogenous risk that the DeFi world was susceptible to a few years ago, and they're bringing like real business and revenue into crypto, and they're serving it as yield, maybe in a yield-bearing stablecoin, a yield coin. Are you suggesting that the best path for them is to start getting ahead of the 8 ball, going and exploring securities laws, and probably launch as a security?
It really depends, I would say, in terms of what you're talking about, in terms of what is the security. So there's like a couple of elements here. There's like, do you have a product that is a yield coin? And is that yield coin in and of itself a security? You could take one belief that it is. And, you know, for instance, yeah, like I think that there's yield coins out there right now that limit US persons from, you know, minting or redeeming them, basically interacting with them directly. And there's a KYC element for the same reason. That is fundamentally different from, let's say, the governance token that is, you know, maybe, you know, collecting or like governing the entire protocol. That I'd say is probably not the aspect that the security is. And that would be something that is covered more in the Clarity Act or whatever it ends up becoming called. But the products themselves can be viewed as securities just in the fact that they are accepting, you know, a subscription and redemptions effectively. And we have rules around this, which is like a Reg D offering, which basically means over a period of time, you can use an exemption to not have to go through the full securities offering, securities listing process. If you wanted to do that, then that's something that you could go through the process of. We just don't have any, you know, Reg D exemptions for crypto. So you kind of have an option to like do the Reg D offering, limit the number of participants. Like they're built for a securities landscape that doesn't factor in this concept. That's where things like the Innovation Hub with the SEC, I think, are extremely valuable. because it's not just a one-way street. It's not like you're in the hub, you basically get like a all clear for the next 3 or 4 years. It's more like they're trying to work with the industry to figure out what the next type of innovation hub or what the next type of exception could be based off of feedback they're getting from innovation hub participants. Like that's why I think we've put a lot of stake in this Clarity Act or this market structure bill passing, and I think that there's elements of it that are going to be really important, and we need to have at least, as Vance said, clarity on what these assets are and a path to decentralization. But the nuts and bolts of what really matters when it comes to like NuFi, if that's what we're calling it, is really going to be about participation and conversation with the SEC via the Innovation Hub. That's where the nuance and the real rulemaking that's more important, than what is decentralized, what is not. That's where that's going to take place.
Anything to add, Vance?
I think that's broadly right. A lot of these programs will also require you to rep that you are a non-security, and that is like and I think that's being set probably by the Democrats, with the sense that like if you're going to go for this, you actually have to rep publicly, legally, that you are not a security, and so you can't be doing like some fugazi decentralization for no reason. It ups the stakes for protocols for sure.
But once again, it's like, what is you and what is repping? Like you is not like the product that you're building, the yield coin that you're building. It could be, but you could use the exemption for that. And that says that you are a security, but your securities offering doesn't have to go through the exemption process. Right. It probably doesn't mean like the governance token. That one is the one that you're repping and saying, hey, that's not a security.
Yeah. Well, that kind of brings us to another good point. We had Jordi Alexander on earlier, and he's talking about the whole model of buybacks and how he's more of a fan of actually doing buybacks in a way that is let's just say more game theoretically apt rather than just aping every day programmatically hyperliquid style, which forces retail to be buying in at highs where. Because there's always this buyback and yada, yada. He has a very fund manager-esque approach to this. And we got into kind of like the token equity dilemma, which we're kind of orbiting around here right now. And so I guess the point and the question is this new kind of like neo-finance category tokens, are they going to be able to create a more unified approach to what your claims on ownership are, what really you are owning? Like, how do you guys see the evolution of the token infrastructure standards evolving this year in this category? I think these teams will probably be leading this because they have real flows, because they have revenues. How do you guys see this token equity dynamic evolving as it relates to kind of what we're talking about here?
I think the equity side has to be done. There's really no workable path for a dual structure. There's this good line about like, democracy can't be two wolves and a sheep arguing about what they have for dinner, because it's going to be, just diluting the token. It's going to be raiding the treasury. It's going to be all the easy things that you can do. And I'm not very sympathetic to founders that are saying like, we need like this equity structure because we need to grow the protocol. And that just reeks of me as to, they didn't get enough exit liquidity on the token. Now they need to layer another useless part of OPEX on top of the protocol in order to continue to get paid. The idea of these protocols is that they're done at a certain point. And there should be a robust ecosystem of, folks like Consensus for ETH who are able to grow it without being, directly tied to it or having governance over it, especially not owning the brand and the rights and the IP over it. So I don't think those structures are workable at all. I do think the optimal structure is a foundation, a permanent capital vehicle that can permanently align, that does not have a profit incentive, rights over IP or brand. That does seem to be, after 5 years of doing this, we've never seen the equity token thing work. 1 + 1 does not equal 15. There's no, that doesn't make any sense.
I will say, we're talking about multiple things here, which is, there's the equity tokens, which is like tokenizing existing equities and bringing them on chain. That's, just to be clear, not what we're talking about. What we're talking about is like the equity of the labs company, let's say, persisting on, continuing on. Look, I think Consensus in Ethereum is probably the best in class example of this. Consensus is a centralized entity. It has a business model. Like, there were rumors that it was going to go public at some point, and it owns MetaMask. It's making a ton of money from all the different business lines that it has. But it is aligned with Ethereum because I'm sure it has a ton of Ethereum on its balance sheet too. If not from the ICO, from purchases after, or quickly after, or maybe funded by Joe Lubin himself. I don't know exactly. But the point is, you want to have an aligned entity that can go off and make business transactions and sign contracts, because there are actually limitations as to what foundations are able to do. You can't hold equity in a foundation. Like there's just like structural limitations. You want a centralized company to be able to do that, but also employ a bunch of people and scale up, raise venture capital. Like all of that stuff is valuable. And a foundation isn't able to do that. They're able to sell tokens and hold a balance sheet of cash and tokens, basically. But I do think that when you're talking about a token, that probably is the ideological split, which is the IP, the brand, the technology, and the token are governed by the token itself. And so whatever business activity is being generated by the protocol, that determines the value of the foundation, which is basically a proxy for the valuation of the network and the token itself. The IP that's generated off chain and in the company, like all of that stuff accrues to the value of the equity. And like we can have two different layers. It's just that they're going to have completely different mandates. Trying to squash them together is like, to Vance's point, it just doesn't work.
Yeah.
We've seen hundreds of these at this point. Like none of them have worked out well. Look at Uniswap and Uniswap Labs at this point as a great example. It just is hard to do round peg square hole.
Yeah. So consolidation into the token and into a foundation, but then, okay, so then let's say we get there, right? And let's say some of these products do this, whether it's retroactively or proactively. How do I as an investor then know what I'm buying? Because like I think that's still a problem here is what am I buying when I buy XYZ token? Like I don't really know. So like what's the step from there to like understand what I'm actually owning?
Yeah, sorry. So to add to this, I think what you are buying, so what you're buying with equity, with shares, is obviously the future stream of value, whether revenue, profits, whatever you want to call it, the IP of the company itself, and the brand, and sort of like what's called goodwill. Like that's all on the balance sheet of an equity, and then you have your proportional share based off of your ownership of equities. Now there's like decades, centuries of case law that like backs all of this up, basically, and that's why we have robust financial markets around equities in the United States and elsewhere around the world, is because we have property rights for those. What we don't have currently is property rights for tokens. What we probably need is property rights for tokens. And I think that's
sounds like a framework article.
The first step in getting there is identifying what a decentralized network token is relative to the equity. But just to like pull the curtain back a little bit, when you're a company that's building a protocol, what happens is you start off as just a company and you raise venture capital for it. It's into a labs company. The investors who raise the money are getting, equity in the company, but they're also getting a warrant for future tokens if you are to build the protocol. It's like the structural way to fund, new networks. At a certain point, the company basically splits. It's like as life begins, as life starts, it's like the cells split, and like one of them continues off as a foundation and one of them continues on as a company, just like it was set up to do. There's an IP transfer that happens. So any of the IP that's related to the network, the token, the protocol, that transfers to the foundation. Whatever's not stays within the company. There may be residual value in the company. There's a lot of people who will continue to work for the company, developing open source software for the foundation. Maybe they're getting paid in tokens that the foundation is giving them. Like that's structurally kind of like how everything works. But I hear you in that we don't have rules and regulations around, I own this token, I get a proportional right to whatever is in this network.
And that's why equities are outperforming, like stocks are outperforming crypto right now, because everyone's like, well, I'm just going to go buy something that I know is going to stick around longer and has like, I'm actually buying something that I know what I'm getting or something, right? So
first step in us being able to do property rights for tokens is defining what a token is with market structure built.
It all comes full circle. Vance, anything to add?
I think it has come full circle, and there's going to be a lot of tokens that just have no purpose. But like this whole idea of there's a ton of breadth in crypto and a ton of projects to invest in, I think is just patently false. Like the industry needs to focus on the 5 to 10 that are really working. And I think some exchanges are somewhat incentivized against this. like Coinbase specifically offering every coin under the sun, including creator coins, it's just a travesty. I think really this at some level also needs to be policed by the exchanges in terms of what they give access to users, or what users get access to trade.
Totally.
So, assuming that this market structure bill passes before the midterms, that would be the ideal for us, I think, as an industry. We should get this. Like, this should be 2026 should very much be the year of kind of like defining what it is that we're building here in the industry from the token perspective. What is the logical consequence here, or second and third order is, okay, a lot of these tokens are going to be deemed as you say, Vance, kind of like useless or worthless. But then there should be a bit of like a value concentration power law happening this year. And I put out this tweet yesterday saying that I think 2026 is the year where we'll really get the, further definition of like the Mag 7 of crypto that will be very investable tokens for like the next half decade. But then last night I was having beers with the Circle head of research actually up here in Hawaii. Brought him to the place, showed him the view. It was total schmooze off. And he's like, man, it took 15 years for the Mag 7 of the actual equity market to be created. How do you guys think about the ramifications of what we're talking about here? Will we then see like this pocket of investable assets in crypto basically come by the end of this year into next year? How do you guys view that process of like basic consolidation happening? I assume you feel you're already positioned for it in your portfolio. Other investors may not be. How do you kind of think about this? What's the mental model for this investable future of like smaller number of quality assets going forward?
I mean, we may not be 15 years in, but we're at least 5 years in. And we may not have a Mag 7, but I think we've probably got like a Mag 3 or 4.
Yep.
Like, there are investable assets. And the reason why you call them a Mag 7 is because they're the ones that have outperformed, but they've outperformed based off of their business being so strong and growth being so robust. They just like drag the rest of the indices up, and kicking and streaming in some cases. And, we're at all-time highs. I think, the Dow Jones is like, it either passed or is about to pass 49,000, which would be an all-time high. Like, but if you look at the representation of that, there actually are a number of assets that have done well, but like the Mag 7 is what's driving it. And that's the whole point. If you look at and it's unfortunate that this is the case, but after 1010, we're at such a high point. If you look at any of the alts, like they've just gotten absolutely crushed, decimated. Like it is tough out there. But there are certain assets that are up, on the year, up since 1010, and have extreme growth forecast for what they're going to enable in 2026. Like we are starting to separate. What we also need, I think, is understanding of how is something valuable in crypto. And I think basically we've got 3 camps, and it's like very, very broad, but the 3 are Bitcoin as one of them, smart contract platforms that have, some monetary premium. I would put Ethereum and Solana, and that's it in that. And honestly, and unfortunately, I would also maybe put XRP in that, just based off of all the attention that they have. Look, it pains me to say it, but that's true.
That's brutal.
And then the third camp is businesses with fundamentals that are on chain. That's it. Those are the 3 categories.
Just real quick, from framework perspective, is the allocation like, a lot of Bitcoin, some of camp 2, some of camp 3, or is it like just?
No, I mean, look, it's hard to build a venture case or a venture fund around Bitcoin.
Of course.
Now, if you're an asset manager or an ETF manager doing a different strategy, like if you can charge 2 and 20 to own Bitcoin, then that's great. But I think that's just not our strategy. That's not our forte. We did invest in Ethereum when we started the fund, and that was a huge, value driver in our first fund, as well as a number of other DeFi assets, and a lot of them we talked about today.
Yeah.
But I think going forward, it's who is building a strong business and has value accrual to a network asset, with the expectation that over the lifetime of that investment, property rights will define, clarity and structure around ownership of that asset.
Within that last category, is there also a carve out for things that might not even launch a token, but they do have on-chain services? Like maybe they have a Stripe that has a stable coin?
Yeah, and equity has been, I mean, you probably saw the rain cards big that they raised today, but it's never been better for equity investors. And I don't know if CT has figured this out yet, or maybe they have and they're butthurt about it, but like that involves no community allocation. So that's kind of a tough one. And you know, we've had big wins on the equity side, and we're starting to see IPOs and M&A and things like that. And that may be one of the animating forces behind crypto going forward, is just this equity outcome that is not available to the community. And that means there's no wealth effect, and that means there's all these other, you know, probably not as great secondary knock-on effects. But I think what we've seen with tokens has been we do have probably the Mag 3 or 4. The incumbents are incredibly hard to displace, especially now because there's no venture dollars which can fuel a real shot at them. And that all impacts, frankly, people's ability to get upside in these things. And so I would say the general retail participation landscape has to change pretty dramatically going forward. There's not going to be a ton more airdrops. Like, and frankly, like as we think about tokens, like it used to be, we do, you know, 1 to 2 token or equity to token ratio. I think that's kind of going away because there's no need to give half to the community anymore. So we're closing the chapter on crypto, the first era of real kind of venture-driven crypto with these tokens. And I think what we're going to be left with is kind of these one-of-one Monet paintings in terms of they're very unique, they're very singular, but there's probably 3 or 4 tokens that are really worth buying and very, very interesting as businesses. But that's it. And that's kind of our contribution to this world so far. And it won't stop there, but generally tokens need to be treated better. And part of that is regulation. Part of that is, you know, giving less to the community. Part of that is just having better business fundamentals, but probably not what people want to hear in terms of, you know, airdrop hunters or whatever you want to call them.
And just as additional color, you know, like at Framework, we're probably 50-50 tokens equity. So like we're talking tokens here, and I think that's probably the most interesting, you know, generally right now for this audience. But equity, I'd say, is not only increasing in interest, but it's been a mainstay of our strategy since day one.
There's an increasing breadth of assets that have on-chain products and services that don't have tokens and have equities.
Yeah.
Guys, closing out. How are we feeling? Are we still bulled up, full on? I'm a little scared out here.
You've been scared for months, though. Look,
exactly.
I think what I would say is that people should really read the documentation around both BM&R and MicroStrategy. Those are the main driving factors of this market. And the MSCI decision, you know, they actually kept MicroStrategy. And then the Tom Lee pay package is on the 15th, and there will be all sorts of knock-on effects to that, coupled with very strong ETF flows over the past week. Yesterday it was outflows, but the first 2 days, you know, Monday, Tuesday, Wednesday, were 9-figure days for both ETH and then 9-figure days for BTC. Like those two things, that's the 1-2 punch that makes the assets go up. Not the vibes, not the CT, you know, commentary, but those two things are what is the driving force. So if you're bullish on crypto, it's because you understand those two things, or you just have a view that these things are inevitable. But I would say Bitcoin and ETH are kind of singular, and then the DeFi names are singular, and then everything else, you know, is kind of out of our purview, and we don't really have a view. There's things that haven't worked in the past, but I would say the vast majority of our thought process is staying long and waiting for the inevitable push to new all-time highs for the majors.
What Vance is dancing around is a bit of a perspective that we have, you know, read about, but also kind of discovered, and no proprietary information here. This is all in disclosures and you know, everything that's been put out from BM&R in particular. But it looks like Tom Lee has been building an extremely large in the money call position on ETH. Which, as well as stacking at least $1 billion in unencumbered cash right now, but that's been $1 billion for the last month plus, while also hitting massive ATM numbers. Where is that cash going? Our belief is that it's going into a very large call position, which you actually started to see earlier this week on the dealers delta hedging ETH, which is why it went from 2,700 to like 31, 32, 33, kind of out of nowhere and with no information whatsoever. Tom Lee has his shareholder vote next week. That shareholder vote decides his pay package. Our expectation is he's basically been building this position for the last month or two Also, the expectation is that he's been selling a ton of puts in December when everybody thought it was going to 1,000 or 1,500. He was basically like, nope. So like, I think rotating the premiums from that, raising the cash from the ATM, and building this massive call position, our guess and a lot of people's guess seems to be in the high 6 figures, potentially 7 figures of ETH notional. And executing on that is massive. So I would expect that there's potentially fireworks in the next few weeks for in particular Ethereum. I think the MSCI announcement, I agree, is actually extremely bullish sailor for at least another 12 months until he can right size the ATM and fundraising process, which I think he absolutely will. And yeah, I think we, in talking about market structure here, definitely have put a lot of chips on the table in terms of market structure passing. I actually think that it is important, and it would be great if it passes like next week or gets through committee next week. I don't think it actually matters that much if it's before or after the midterms, because what will matter a lot more is what the Innovation Hub actually does. And the idea is like you join the Innovation Hub, and the SEC wants people to join, and they're like things that we have talked about, on channel today are definitely, looking at this very strongly. And the idea is that you get a multi-year kind of sandbox, multi-year, like effectively like a no action for 3, 4, 5 years. I'm not sure exactly how long it is, but the idea is like you get a long time to basically figure out everything. And in doing so, you work with the SEC to, as we're talking about, like define some of these rules. So like extremely bullish that like that's happening way sooner than any of the market structure bill would happen in the first place. So like that's way more bullish than market structure.
And look, the things that really matter as well are the DATs and the ETFs being in good shape, plus a narrative drive. And we have all the ingredients for that with relatively light positioning. So that's kind of how we think about it. And I think at a very, very high level, in a world of AI and like how fat the tails are getting on with AI, like, Skylink or Starlink or Skynet, robots taking over, like there's going to be a need for a world computer. There's going to be a need for a digital store of value that is not gold. I think there's a lot to be optimistic on with regards to just crypto's inevitability within a world filled with AI.
Yeah, Hasid gave us the asteroid mining is getting extremely sophisticated. So gold is going to be, watch out for all your gold bugs.
The SpaceX IPO, part of the SpaceX plan. Is
Gents, I think I just 100x longed ETH. Thanks for coming on.
Again? Is that 1,000x now?
Thank you, guys.
I would just encourage you guys and anybody else who's curious to go dig through some BMNR stuff, because you pull on the thread, it's long.
Yeah, we stayed up. I forget which night that was, but
I think Tuesday night.
I found this article, and Michael goes to bed much earlier than I do, and I was just spamming Michael all day. Hey, like I found this. Like, look at this, and like I saw him the next morning. Very clear that he did not sleep at all.
Sounds very familiar.
Michael is. I'm more of the night owl. Michael is early to bed, early riser.
Sounds
all right,
healthy.
gents. Happy New Year. Have a good weekend. Thanks for coming on.
Cheers, guys.
Later.
See you soon.
Bye.
Cheers. All righty, guys. Happy Friday. Aloha Friday, my boy. I'm out of here.
Aloha Friday.
I got to pee like a racehorse. I am sweating. I'm hungry. I'm tired. What a week. What a fun stream as well.
It's a good way to end off the week. Great way to cap off.
Yeah, man.
Framework
Beautiful
guys
day.
are great. They really help cut through the noise. Always bring us a pretty unique perspective.
They're just bullish on Neo Finance. Everyone's bullish on Neo Finance, man. You got to love it. You got to absolutely love it. So, ladies and gentlemen of the Rollup TV community, see you fresh and early Monday. Speak soon. Mahalo. Ciao, ciao. Feel better, Rob. Bye.